Good morning, traders. This is Rose. Today is Friday, September 16th, quarter after 9 a.m. Eastern Time. Okay. Just doing a quick audio and video check. Just doing a quick audio and video check. Okay, very good. All right, let's see. Just going to do a couple of things before. Okay. All right. Alrighty. All right, so interesting day yesterday. It started as a slight gap down. However, we immediately covered, but we basically opened trading range because the day before was a trading range day, and then we opened within that trading range. And you can see that that trading range was kind of an expanding triangle, okay? So we opened here, and it's almost in the middle, and then immediately went above it with bull bars, retest of these trading range highs, and then started to come down with two legs. But I'm going to go over that real quickly. Now, last week and the week before, we have been calling this area resistance, and even the bulls done a phenomenal job with this. But you can see that we are about to test the breakout area. So with that kind of gap bar, bears are waiting there to sell. So the market sold. Now the selling was incredibly strong and fast due to CPI report came out, and it played as a catalyst to drive the market down. But that's exactly what the bears wanted to have anyway. So what the bulls want to have anyway, because they want to buy low. So better it comes down, and plus we have a balance area. And I marked this area, and I said, this area, I believe it was on Wednesday, and I said, this area is important, and we're going to come down here. I expected that it followed through, and we did, but although I don't know why this bar changed, but it's supposed to be red. So anyway, so the follow through comes in pretty good. So we have a second leg. Bears are looking for a second leg, and we broke these lows. We're making new lows, and this is the area that I'm interested for market to test. Now, I don't know if I actually did a good job here, but let's see. I'm trying to take, it could be this. If I take all the way down here, would not work well. So I'm going to take that body, and this seems to be okay. So what I'm going to do, I'm going to mark the middle of this area, which is right there. That should be 15, just round it. Okay, so this is the area I am interested for market to come down and test that. It could play a role as support, so I'm going to make that green. So this is an area of interest. Now, today is quadruple witching, so all three asset classes expire. And we have to be careful with that because that means we're going to get a lot of volatility. And I mean, market can make big moves fast back to back, okay? And we're testing the last week's low on the hourly chart. So here is my last week's boundaries. It's already there, but in case you're missing it. So this is my last week, Monday, Tuesday, Wednesday, Thursday, Friday. And we gapped up this week, Monday, but immediately trapped the bulls. Now, why did we trap the bulls? Look at that gap bar right there, okay? From here, but that is what I'm interested. From there, okay? Hang on a minute, something's beeping. But anyway, so from there to there, we know bears are waiting. So the gap is from this high all the way to that low. So from here to here is actually the gap. Now we tested that, immediately come down, right? So Monday, Tuesday, Wednesday, Thursday, and the Friday will begin. So we have spike, pullback, and channel coming down. But really what we're doing is we're testing the last week's low. Now, if we do break this, but we're going to open up somewhere here. If we do break this by coming back down, we could come down to these areas, but we're going to open up just about here. So what the bulls are trying to do is that they've got 1, 2, 3, and an overshoot, okay, and a failure of wedge breakdown. Also testing these lows. So they're bouncing all the way up here. Now we're in a trading range, okay, on the hourly. We might come down, we might go back. So I don't know. We could end up making these, okay, strong moves up and down, or we're going to go up. We're going to test the trading range highs, and then we're going to come down and we're going to break it. That's possible. Or the bulls are going to take it over, and this is it. Because what I see here is, here you go. So if I take these lows, okay, we have a huge channel. Okay, so I'm trying to find some kind of reversal. Huge channel. Okay, so I'm trying to find some kind of reversal. Okay, so we're going to open up here. We're going back to the midpoint of this big channel testing, right? You don't have to put your channel high up here. You can put it also here, so I'll do that as well. So that's a alternative. Okay. You can use that. So let me get rid of that for a minute. So let's use this. So we're going to open up here. We're already above the mid. We could go and test right around here. We're only about, let me see, 4 points away from the high. So we're probably going to test it. But you see this equal highs right there? That's liquidity right there. And there's a gap. Okay, if the bears want to maintain that gap on the higher time frame, we could end up selling this pretty fast, right? So be careful with that. And then if we find support here, we could end up going up, right? So we have a huge trading range here, and we're testing the low of the trading range. And we could be bullish, we could be bearish, so we'll see how this goes. But I'm going to leave this channel here. Okay, so we're pulling back now. If this is too low to sell for bears, obviously they're looking for a pullback. They're getting their pullback. We're about to test the high of that channel, and we could end up coming down. Now on the Globex session, it's a pretty wide Globex session, so that also signaling me that we could end up making big moves. Okay, so it's a pretty wide range, and that's a Globex high right there. And the Globex low right here. Asia broke down, okay, came back up to midnight open, found sellers there, and started the swing. So that swing began around 7 a.m. Now, I don't know if this has anything to do with news. Let me take a look. We don't think we have anything. Nope, we have nothing. So consumer sentiment is the news at 10 o'clock schedule. Okay, so that swing began right there. And I mean, Asia got 1-to-1, 2-to-1. They're going for 3-to-1 most likely. So we might get a quick breakout before going back up. So let's see how this works. Or we're just going to go up and then we're going to swing it down again. You see this right here? This is a major sell. When we get back up to this VWAP, sellers are waiting there strong. So that's another way to read it. That's how I read it. So even if we go up, sellers are waiting very strong at that VWAP area. Happens so you don't need these moving averages. You don't need anything. Everything's in front of you. There's a breakout test area. We could go there and we could sell. So everything seems to be going up, coming down. So that's what I'm going to be looking for. But let's take a look at weekly. Weekly, we have quite a bit of strong weak wire, and it's an outside down. So bears might be trying to close this bearish as possible, but you see this area? Smack in the middle of it is balance zone midpoint. So there will be some kind of buyers there. So we could come down. Also, if we do come down without going up, we could bounce as well. All right, so bulls want some kind of double bottom. 1, 2, 3 wedge. Some kind of double bottom, maybe higher, low, trend reversal. I mean, who knows, right? So we'll see. And on the monthly, obviously, monthly bar is trying to come down. Maybe that area. This is a magnet, but we're far away from it. So we need a major catalyst. On the monthly, I have a measured move, bear target. I always had these bear moves back of my mind, and I said, that's a bigger move. I think this is where we're trying to go, and there we have a measured move. Looks like bears are going to try. What they're looking for is a pullback and a second leg down, and I saw that on the daily. I saw that on the weekly. And then that's because we have that measured move on the monthly. All right, so we have some kind of a game plan here. And if you're scared to trade today, I don't blame you. Look, it's from my own experience. Quadruple witching is a tough day to trade. Things will happen, and you're going to be shocked. I was shocked because I lost thousands of dollars in one day. And that was kind of a big lesson to me years and years ago. I mean, not too many years ago, but when I first started, and I couldn't believe it. I said, I got to be dumb here. And then somebody told me, no, you're not dumb. You can read the price action. You're just not educated. You don't know ins and outs and how these certain days play. You need to learn those. And if nobody's teaching you, okay, it's in your hands to make the research and learn about futures. What are those certain days that can play major role? Okay, market can make very quick, sharp turns. And sometimes it's okay to just not trade those days, right? So anyway. Okay, so I'm going to go through the yesterday's price action, but it would be a good learning experience either way, okay? Or at least maybe trade with micros if you don't want to risk much. All right, so yesterday we opened right here, and you got basically what you're getting here is a test of almost a low of prior day's trading range. But I want to show you guys something, okay? Pay extra attention here. You're going to find these on a micro, macro, large time frames. What I'm going to be showing you is going to help you a lot, even if you're trading on tick charts, okay? Market is about to open, but I want to show it to you. So market is coming down, right? We have a certain structure here. Look what happened here. Market pulled down below that with strong bear bars, but it didn't stay there much, but it broke that, okay? And then we go right back up, very strong. Mark that area, okay? If you want to buy, don't buy up here. Wait for market to get there and then swing. That's your swing entry. That's a major buy zone. Now, how it works is like this. Market goes maybe like that. Suddenly we get this breakdown. We break that structure, but we don't stay too long. Then we go up above that line. That means sentiment is changing, especially if we take out half or maybe even more of this move. But if we're not going back up right away to test the highs, and if we're coming down, this is a sentiment change. That means market is showing you it might stay bullish for a while. So you have a good opportunity to buy in. Find where that move began. Okay, there are two steps. There is that right here. You can buy as early, or there is down here. You can buy again. That's the first buy zone. Look at that. It goes up. See that gap right there? That gap is kept. Okay, sometimes we do not feel that gap. That's market comes down. That's the first entry long. You can buy, I don't know, if you're going to go in with 2 contracts, only enter with 1 contract. And if it's not going and somehow turned against you, wait for it to come down. It'll probably going to give you another entry, and you could break even if you are stuck, but you're going to make money with that first entry. So it goes like this for the bears. Okay, so your market is maybe going like that, breaks that structure, okay? But it doesn't stay too long, right? And then starts to come down, taking out, and it's shaking everybody out. Everybody thinks, oh my goodness, we're going to sell this. Sell, 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 sell. And then they get stuck because they don't know better. This is going to go back up to where that move began. That's this is probably, there's a leg here, a pause. That pause is the first sell, and that's the second. First sell can sell, and then it could go up, and that's your swing short. Okay, so I'm going to try to point those out on the 5-minute chart for you guys. It works just fine. I trade with that all the time. It's a structural trade, really. Anyway, so we opened here, went up, and then we made a double top. You could see 1, 2, 3 push and a lower high right there. 1, 2, 3 push and a lower high, and then market. So that was the last push. The third push made the high. I marked that low and try to see second sell signal. And that's my swing entry. Where is that? Let's take a look. So this bar right here, ton of charts that I post, and I mark these for you if you want to get a refresher. This is the wedge. This is how I trade the wedges, right? So I put a line there. Now I'm looking for a second entry short. That's my first entry. I'm not going to take that because that bar did not close underneath the low of that bar, made the last high, the third push high. I don't have a signal to sell, so I got to wait. Oh, I've got a signal, sell. And I'm going to take profit at those lows because it's probably going to bounce, okay? And then I see gaps open, right? I see a leg, probably going to get a next leg, and it's coming down. I'm going to sell again. Now, that's a flag right there, right? So you have a flag here, bear flag. So this is it. This is first sell, and that's second sell. I'm going to take that, okay? So sell, 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 and that's it. 1, 2, and 3. I've got a wedge there. Now, which bar made the last third push down lows? Bar 22. So if you actually put a line there, right, that's your buy signal. But if you're buying it, you're not going too far because where are you going? Well, there's a breakout point right there. You're going to the EMA. EMA probably sellers are waiting. So if you bolt this right there, well, you would never want to get in right there. 1 tick above the bar 23. If you do that, there's no space. You know, you're trying to go up maybe 5, 10 points when there's no space there, and you know market was very bearish there. So don't buy, okay? Chances are you got a channel here. It's going to sell there. So that's something that I would not have bought. But you see this bar 22? It's a trap bar. So you could have said, well, I'm not going to take that. It's already outside up bar. We're close. I'm going to take this as my, okay, base bar. Last bar of the wedge because this is a trap and this is my signal. Now if you buy 1 tick above it, then you have plenty of space to scalp. Okay, so now you have another flag at the EMA, right? First sell, second sell, sell that with a lower high, stop goes there, you're going to take profit at those lows regardless. And if you want to leave a runner, that's fine, but runner is not running. It ran a little bit, but your stop is here. You either leave your stop there to see if actually going to get hit, and that's how you be kicked out. But once I see bar 34, I'm out. I'm never letting that stop hit. I'm out and I'm jumping in, okay? Because why? Look at it. We're at the lows, and I want to buy because obviously I see no continuation. Failed for the second time. Bears try to sell once, failed. Bears try to sell twice, failed. And then you get this bar 34. If your stop is here, hit close right away. Don't even think, okay? Hit close and hit buy at the same time. Close buy, that bar. Stops here, first pullback, second pullback, second entry long, and that's your swing. So this goes on and on and on and on all the time. Now, there's a wedge failure here. Let's talk about that before I jump in today's, because it's going slow. Hold on, though. Adjust it. We gap down on the RTH, today's chart. So I've got a wedge here. 1 down, 2 down, 3. That's the highest of the wedge, bar 42. Now that's nice, okay? So if I actually mark that, right? So I'm looking for bear bars, but that's not where I mark. I'm looking for bear bars to break that. Where is the bear bar? Oh, there's nothing. There's actually a breakout. So we actually took out the high of that third push. 1, pullback, 2, pullback, third push. And now we have a breakout bar. Obviously, nothing selling. This wedge failed. So that means what? Measured move target. That's my early measured move target, or you can measure it from there, right? So I'm going to go long. That's a beautiful bar. That's a high probability bar, right? So it's a breakout bar. It's probably going to go higher. Just buy it. Now you're looking for spike, pullback, second push, right? So first push, pullback, second push, pullback, third push. Now I have this. That's the last push, third push, made the higher high. What am I looking for? I'm looking for a bear bar closes below that level. That's the first bar. I could sell that, put my stop here. If it goes again, I'm probably going to sell that again, right? But if I want to take a chance right away, it's not a good bar, but it closed on its mid-level. Or sell this. That's your second confirmation, and you're swinging down. Where are you going to take profit? First, you're going to take profit there, okay? Or you're going to take profit here, or you're basically wanting to, you want to test here, okay? So you want market to go down to these lows. Market came down here, right? So leg 1, pull back up. So either you take profit there or you take profit there, okay? See, it did bounce, but it made another 1, pull back 2, pull back 3, okay? And you have again, mark that. There's a breakdown, sell. We're probably going to go beyond this low. But if you want to take first profit there and see if your runner runs, oh yeah, that runner ran all the way down here. But that's the end of the day and you're out, okay? So it's very simple. If you learn wedge, just go back to the wedge lessons, okay? Learn them, make it your own, find what's happening, find the most probable trade entries. The way that I'm showing you is, okay, you are going to do well trading. Just trading wedges. It's very profitable, okay? I mean, I do well, right? So if I find 2 wedge trades during the day, I'm fine. I made my daily income and I don't need to worry about anything else. Okay, good morning, everybody. If you just joined, oh no, oh, please don't. One of my charts just went black. It's like the death. I hate when this happens in the morning. So hopefully it'll come back. I'm not touching anything. I was just dragging something and suddenly just locked. It's in the morning. So hopefully it'll come back. I'm not touching anything. I was just dragging something and suddenly just locked. Just give it a second. I might need to relaunch this. application if it crashes on me. It looks like it's crashing. I posted a bunch of charts since last week. Mark those. Just look under. I think it's all things trading over the weekend. I post in there since the trade room is closed. I'm sorry, but I think my application just died and it's just doing nothing. Something happened this morning. I was driving back from the city. That's why I was a late open, so I couldn't reset the database. I do reset the database and clean up the old files in Ninja. I couldn't do that this morning because I was rushing. Could be the problem here, but it completely locked everything. It won't even. And then it locked my computer, and I tried to do Control-Alt-Delete, and then suddenly I got the security options are installing. What do you mean? This is the thing that I hate about Microsoft. They do things on behalf of you. Like, you don't accept changes. They won't let you. It's so invasive. It takes over. And maybe I don't want to do upgrades or updates. Just leave me alone. Here. So this is, yep. Hang on. Okay, so it crashed. All right, finally. All right, let me relaunch this real quick. So I don't know what's causing this, but I think I'm going to switch. I'm going to get a new computer. I decided to get a Mac. That will be my second Mac. I'm going to get one of those new ones with really loaded, upgraded CPUs and everything. Because I have this old Mac 13-inch, and I do great on it with only 4 GB RAM dedicated to the parallel. That's where I run the Windows. It just works fine. But I'm done with Windows. Yep, that's what I'm going to get. I have old Mac Pro. I've been using it since 2013, late edition. Let me tell you something. No viruses, not once. Nothing ever happened. It's still going. It's still working just fine. So, and I got this computer, Asus gaming machine, supposed to be, you know, knocking my socks out, but it's knocking nothing. It's just absolutely horrible. And it's only, I got it in 2018. It's the worst thing ever. It's always a confusion, and I'm confused, and it's surprises, and that's the last thing you want, surprises while trading. But, you know, I guarantee you it's probably 60% of all of those errors are user related. So I'm probably missing something. I'm doing something wrong that I might be causing. So I have to admit that. All right. It's almost there. Okay. So it's bunch of overlapping bars, expanding triangle here, a form of a bear flag, bar 1, 2, and 3. But be careful here. I thought I did the auto updates. We turned it off. It's just, it does what is it, BIOS? Yeah, it does these updates, and then it resets the Ninja. I have to go back to Ninja and tell them that my computer is not hacked because they lock it. Then I have to go through everything else. It's just a nightmare. All right. It's not updating. Yeah, something is completely wrong here, so give me a second. I see Thinkorswim is moving, and I have the data connection established, but it's just not working. I'm going to give this one more chance. It's a quadruple witching. I told you guys. I mean, I have to laugh at this, you know. I can't be frustrated. I know you guys are frustrated, but I have Thinkorswim, so I see the expanding triangle here, a couple of bars overlapping. This is still very bearish. It's coming down. Just give it a second. All right, here we go. That's better. All right, so we have a gap down. Can I get some coffee? Yes. Go get me some coffee. No. Thank you. Okay, here we go. So what do we got here? We're gap down, right? So we have overlapping bars. We're continuing because on the daily chart, I have the area of interest still attracting the bears, okay? So alternating bars, we can make a new low. We already made a new low with bar 3, right? We're going to eventually go back up because this is not that, you know, strong of a sell, right? There's confusion already here at these lows. Now, if you wonder why that is, and you don't look at 1 hour, you don't look at the 1 hour chart, you don't look at anything else, but you're only trading the 5-minute chart, then you're going to have to expand and look to see what's on the side. Thank you. Look to see what's on the side all the way to here. Right? I don't have enough information here, but you can add. So let's do that. So I'll add 30 days. It's because there's probably something here. See, I can't even get to it. There's empty space here. Empty space means void. That means gap. Bears are seeing some kind of gap here, and they keep selling and selling. So that means this whole area could give us a measured move target all the way down here if we end up getting big bear bars. But I don't see it. Now, I'm not going to keep adding days, so that's when you go back to maybe a 30-minute chart, okay, or just look at the 1 hour chart. So make a habit of looking at larger time frames to see bigger support and resistance areas. I don't have enough data here, but there was something that was marked. It's telling me this is support. So that's why that is attracting the bears, okay? So I do this way ahead of time. So I know I'm not surprised when I see this gap down. Where is it going? What is it trying to do? And I add these layers of more information to see where the market can actually slow down or take a turn. So we breached Globex low briefly with bar 3 and still no solid breakdown. But bar 3 is a breakout bar. So bar 4 is an inside bar, but it's also a pullback bar. Now, how bar 4 closes is an important information. If there are no more sellers and the market wants to trap these sellers who sold bar 3, they can close this bar on its high and then suddenly go back and test these highs. So I don't have that information yet, so I have to wait. All I see right now, we have a breakout bar 3 and it wants to get continuation. So it needs a pullback, and it is pulling back with bar 4. But because the bars are overlapping 80, oh, again. All right, I'm gonna put you guys on, although I don't know how to hide my screen. All right, so I'm gonna do this and see you guys can follow me. If you're using NinjaTrader, you're going to do this. Okay. You go to Documents. Okay. So you find your NinjaTrader, Ninja 8, and then you go to DB database, and you take out pretty much everything other than the NinjaTrader SQL server. So let me do this because this isn't going to end. Let me delete those. Okay, so the bar 4 made a new low, okay, but it did not continue. That's not a good continuation. So let me empty this database and reset the database. So it's a failed breakout, bar 3. Bar 4 is still a pullback bar, but it's a failed breakout now. Okay. Try this again. Well, when was the second time bears try to sell? That would be your low too. Look at bars that close strongly bearish. Because bar 4 could not close a good bear body, this is a limit order market. Some bull machines are trying to buy at the lows and go up and test the highs, but sideways market, not going to touch it. So I just need to reset the database real quickly. That should solve my problems. If it doesn't, I'll just switch to another workspace. That's done. Turn it off, turn it back on. Let's try again. I'll stay a little longer to cover the time lost. All right, so the machines bought the lows because of bar 4, scalped out. Okay, so now bears are trying yet again. So that makes bar 3 weak breakout, but still a breakout. Bar 4 pullback, and now bears are trying to continue down. So they need to close bar 5, breaching those lows, and on the slow to continue to go down. Then you would get some kind of a measured move target, but it's not really a strong breakout at the open, so be careful. There's also a micro wedge in there. I don't know if you guys can count it, but I can see it on the Thinkorswim chart. All right, so let me establish my connection. I do see it. If you count from the bar 1, you're going to see 3 pushes. And some machines do see that, and they see, okay, maybe we can reverse this and trap these bears here. I'm not touching this because it can still break out to the downside. All right. ATI is 13 points and extra quarter, so it's still fast moving market. Area of interest is magnet, especially that half. So just give or take. I've adjusted this earlier, but because the application crashed, it didn't save my changes. So you can do your own. You saw me doing it, so you can make the change on your own chart. I'm not interested in selling this unless it breaks down. Even then, I'm not interested. It's so much down. It's just, it could be that market may actually trap the sellers. But it is bearish. So if you're selling, you're either looking for, sell the close bear bars. We don't have them yet, although we have side-by-side ones, but they're very weak. Okay, so it could turn around any second and go back to bar 1 high, and I don't want to be stuck in that. So if we do reverse, and if we start to swing long, well, that's going to take some time, but 4,000 is basically the bull target, the magnet. So there's some kind of hesitation here. You could see. So we were up and down on this, right? And then up, now new down, up again and down. So we do have a micro wedge there, okay? There's no strong breakdown, and that's why I am hesitating, but we are bearish. I'm just not interested selling this. Now, if it does sell, it could pull down to 38.55 further, or maybe a little bit more down. ATR came down a little bit, 11.25 now, 11 points and a quarter. But right now you have bar 3, 4, 5, 6. Okay, you have 4 bear bars consecutive. Okay, so even the doji is actually a bear body, 1 tick bear body, I think. Although I'm not sure. No, it's actually a bull body, so it's not consecutive. So you have 2 consecutive. That's a 1 leg pullback and a 2 leg. So bears are in their second leg breakout. Now you can say, well, what if there's a breakout? You said, would there be any measured move? I say, yeah, sure. There could be a measured move. That's the one that they might be trying to go to. But there will be a bounce at 38.55 if you're selling this. So I want to check something else. See this trading range here? Okay. This entire trading range. So I'm going to measure that again, just like I did. I'm going to take that as my low, right? We're at a level that's 1-to-1. So if you actually take the height and duplicate, that's the measured move target, the actual measured move. We're breaching it because the ATR is strong, okay? So basically I measured that, and that's the 1-to-1 target right there. So I have a continuation into 49, but I said 55, we might overshoot to 55, but we're going to bounce at 55, I said. So we actually tested 1.5 points below the 55. That's the overshoot, which was expected. Look at the ATR. But I said, if you're selling this, take profit at 55, it's going to bounce, and it is bouncing. So, and it's also overshooting measured move target a little bit, right? So that's why I did not want to sell. I didn't see too much of a space there. It is selling. So let's take a look at that again. There's a 10 o'clock news, consumer sentiment, I believe. Be careful. And that's right there. You needed to take profit. Can it sell? Sure, but that's news now. I can't read the regular price action due to news. Okay. All right. So we're getting this. We're going to go back up to EMA. Now I can sell at the double top at the EMA. Now, if we do keep selling, EMA is going to probably catch up. As price moves down, EMA is calculated from the open, close, high, low of these bars. As the bars move down, EMA is going to come down simultaneously. And by the time we go back up, we might have a bigger range and the EMA, and I can sell that, right? So I might come back and test the lows maybe again. So that's a possibility. So it looks like this is what we got here. So basically, you're counting points, right? Where's the next second sell, right? So first sell, second sell. If you measure from there to there, so you're looking for about, let's see, 5 to 10 points. So you've got, if you sold here or if you sold there, I wouldn't. So if you sold underneath bar 2, that's about 10 points, okay? But if you sold here, right, so that's a 10 points right there. So just about, I was counting about a 10-point move down, and that's why I said take profit around 55. You don't need to worry about the 1 point, 1.5 point. Or if you're counting from here, you can literally count 10 points and take profit at a 9.9.5 just to be sure and then get out. So it's my mental note and then get out. So it's my mental note. I use 4 or 5 bars for the ATR because I look back 4 or 5 bars. Okay, this is, I think, another pullback for bears. But if this bar closes bullish, now bears try to sell once, they try to sell again, and they're failing. If this bar closes on its side with a very small wick, more bulls will jump in. But look at bar 3. Bar 3 is where this two-legged move began, right? So somewhere around here, sellers are waiting, and that gives us that double top. So somewhere around 38.71 to 72 area, bears are waiting. So if this bar closes on its high with a tiniest wick, there will be buyers jumping in. But if it has a bigger lower wick, it may not buy, and it might actually come down more. So I'm still not interested in jumping in as long. Okay. Now, is this pin bar, bar 6, is not a bull bar. It is a pin bar, but market bulls push that body high enough to create 50% pullback long entry with it. Why? Because this is a limit order, and this is a very poor breakout from that limit order market. So limit order conditions still apply. So if you're going to buy, you can't buy one tick above a bear bar that has a significant bear body. If you really committed to buy, at least buy to 50%. Scalp a 2-point and see if your runner runs to these highs. If it doesn't run, you gotta have to get out, right? Because your stop is probably underneath bar 6. So this is still bearish, and bears are basically, what they're doing is they've been trailing their sell orders underneath these lows and jumping in as price makes new lows. So if they want to sell again, they might put their sell stop underneath that bar, but you're trying to sell underneath a bull bar, okay? Now we have first entry long. Bar 7 bought the 50% of bar 6, but it did not close bullish. It's a really bad bull body. But the second bar is now buying. Okay, so the market wants to buy. It's trying to go to the 71 and 72. That's good. But there are sellers waiting there. Now, can we make a double top and sell? Or what if we fail right around here and not make a double top and come back again? That bar is too strong at the moment. It's a news bar. It's the second news bar. All right, so bears still want to sell the double top. They're not very happy with this, but it's strong bar. And I said earlier, I don't know if you guys paid any attention to what I was saying on the Globex. This happened while I was trying to fix my database, okay? But if you paid any attention to what I said, if market comes back up here, it's probably going to sell again, right? So did they sell? Yes, they did. All right. This is strong now, but we're now testing this small range high, so there are probably sellers there. But if the selling is not strong, even after coming back a little bit, we start to close above, we're going to the EMA. So the double top could be slanted. Double top can be like that as well, okay? Can the market be actually swinging long from here and we would become bullish? Well, I would like to see a couple of bull bars really closing on their highs, and I would like to see a bull bar, okay, closing above the EMA, especially if we get a one big bull bar, its entire body is above, that's always in long, then yes, oh, I'll be targeting these highs for sure. Or I could say 50% of yesterday, okay, or I can measure all the way from here to there, and the 50%. Or another way to measure, let me get rid of that. You can measure from either the close to the low, okay, and see if we can actually get to the 50% right there and make a double top and then come down. It's kind of lining up well, isn't it? So we're slowing down here because machines do see, so I'm going to mark that, machines do see this as a trading range highs, but this is what I'm interested. This is that 50%. So I'm going to get rid of this. Let's keep it clean. All right, but you know what that is, right? That's right there, double top. So if you, and I did warn you, bar 3 highs, look, we sold with 2 legs. Remember, you're trading 5 minute, okay? Everybody wants to swing. Sure, we want to swing and we want to make a minimum 40 points, if not 80. Good luck with that, okay? Everybody wants to be a swing trader. My grandmother wants to be a swing trader, but she's not going to get it, all right? What you're getting is 5 minute bars. Learn to scalp, right? Learn to take profit. If you see a 2-legged move down, I said, where did that start? Look, we broke the structure, right? We came down. Bulls are trying to break this structure high, go up and change the sentiment. Remember what I showed you guys? There is a structure, right? And we break it, but we don't stay underneath too long. This isn't a true structure. We immediately go back up. We stall, but if we do break it, that's it. Now the sentiment has changed, bears no more. But if we end up getting 3, 4, 5 bull bars, somewhere here where pause, the bull leg, is your first entry long when the price comes in. But your actual entry would be there. But sometimes it doesn't come down very quickly. It just goes on and on and on and on. So that pullback could be later, but you still mark that. But this is where I'm going to buy the pullback. So I do see that there was a structure here we broke, but we didn't stay too long. But still, where that 2-legged move began, there's still sellers waiting there. That happens to be your top of your trading range. And I said it's the double top or the high of that bar. They're waiting. So you needed to take profit there. Now, if bar 9 takes out the upper wick of bar 8, okay, with a nice bull close body, that's a bull pressure. And that tells me it could go and make a new high and change the sentiment to the bullish. Okay, so there's bull pressure. You can see it, right? They're trying to get to the 50% pullback. They're probably still sellers above that bar 1 because they're disappointed and they don't like this. But 3 bull bars. Now, it's still a double top, but 3 bull bars, if they're trying to sell here, they're either trying to get out, okay? As this comes down, they're selling. You could tell they're selling. That double top, they're selling. So they could just get out because they're disappointed. They see this as a bar 9, a good bull pressure. It's probably trying to get to the EMA, but it is still double top. Right. But it is still double top. So magnet right there, but be careful there because some machines will start to take profit automatically. We're not breaking up, so we have probably a, I'll take it from there, maybe measured move. Some will measure from there. That's fine too. That would be bar 72 low, closing the gap. But really, this is the target. That right there, midnight open, is magnet. So now you understand why I didn't want to sell. I was not. Now you understand how my 1 hour chart is designed to show me where the buyers are and sellers are sitting. Why I did not want to sell. Now you know. All right, so just give me a second, please. 38.92, we might pull back up and test it and then come down, or maybe a slightly higher. 38.90, 38.92. Bulls are trying to get to 4,000. It's not so far from where we are. But we would end up seeing buy to close bull bars. Now we have a gap, okay? I'm going to move this. That's your measured move target. There is a gap here, 1, 2, 3, okay? But we already met that gap, so I don't need to measure it out. I'm not going to do that because that's already, there's a small gap there. If I were to measure it, we already got that, so it means really nothing. The measured move target, that's the target. But really, this is what I'm interested, right around the EMA and the halfway back up from the close of yesterday is the target. All right, so what if it fails? Can it fail? Sure. Where can it fail? It could fail at the EMA. I would look for some kind of good bear bars to sell. Okay, I don't see it. So bulls are still pushing towards the targets above. It's a big bar, so it's probably going to get continuation. But we need to see, even on the 15-minute chart, a good bull body filling this upper wick, just like we did here. So you do not want this to fail and come all the way down to the VWAP. There are buyers waiting at the VWAP, wanting to buy the pullback because we have overlapping bars. So this is a trading range, even though the bar is big. So there are still 13 minutes. This bar is young. Bulls are probably going to try to test the highs of this bar. So that should bring us up to the EMA. You would look for consecutive bars. So you have a breakout bar. So geo big. So you have a breakout, right? So let me get this out of the way. Will you buy that breakout so quickly with an upper wick like that? Say you did, okay? Your stop is down here. You're looking for a 1-to-1. Or you put your stop here. That's not where I would put it, but say you did, right? It's still pretty far away. It's better to look for a pullback, okay? Or you can put one tick above. If the wick is not too big, you can put one tick above and you're hoping to be swept away so the market actually goes beyond the EMA. There's not much of a space if you're buying with a stop order. But if you do put a one tick above that high, a buy order, and if you get in, you grab that 1 point and see if the market moves with your runner, okay? Then you can move your stop quickly to break even and not worry about it. But right now, I said, these are very common scenarios at the open when you gap down or gap up. That's what the if you study the opening of RTH charts, RTH 5-minute regular trading hours, you're going to see this all the time. So double tops can be like that, and I said double tops can be slanted like that. That's still a double top. I said, but sellers are probably waiting above bar 1. And if you do count, it starts around 2 point, 5 point, and 10 point. So here's your 5 point sellers, right around there. Machines know that. So they're going to take profit, okay? Profit taking began maybe like a 1 point above, okay, 2 point above at 7. So 5 to 10 point, you have sellers waiting, so they're taking profit. Now, when can you get in again? Well, you could do 2 things. Mark that breakout, okay, whatever, and see if bears come in and fail to actually close a bar here, and instead that bar closes here. Assess the bar and see how weak bearish it is. If it's weak enough, okay, like it didn't close like that, but it closed up here, you can buy the close and assume this is going to go higher, because that would be a pullback bar. Now, bears did close a really strong bar. In fact, they're testing the 50% of bar 9, okay? So that's still a breakout level, but it is a strong bear bar. Now, you have 3 bull bars and 1 bear bar. So some buyers will buy that because they think that this is good enough leg that needs a second leg. So what you can do is maybe you can wait for bar 11 to close on its high, right? It's a II. So we have outside bar 9, we have inside, and we have another inside of inside bar. Well, the bar hasn't closed yet, so it's not really II. But it's still some kind of, it could create a breakout mode, especially if the bar 11 closes on its high strongly bullish. Then that becomes a good, maybe a buy entry, and you would scalp at the EMA, but you're looking for furthermore up. Now, what if this fails? What I'm looking for is this for bears. Okay. See that right there? Bull leg, but that's the second bull leg. We don't have a second bull leg yet. Ours is a little bit different. See this? Or you could say, hey, this was a first bull leg and a second and a third. Then you have a wedge here, okay? And bear sold that wedge. So what do we got? We have leg 1. We didn't even make the leg 2. Right? So I'm going to wait. I think bulls are going to try to buy this and go back and maybe make a 3 push wedge top. But if they do sell, then I'm looking for them to close all the way down here and then get another leg down. But if they cannot do that, I'm not interested, because we're going to go back up to the EMA most likely. I don't want to sell against 3 bull bars like that. 2 of them closed on their highs. 8 is closed in the middle, but the last one is really strong in a breakout bar. So basically, this is becoming a breakout pullback. And I said, I didn't see a bull pressure, okay? And we ended up coming down to the EMA. Why? Because we're still in some kind of, bears are seeing some kind of bear flag, but this is really trading range, but it's also expanding triangle. So they're trying to test these, okay, extremes and come back to the middle where they balance and make a decision. So if your apex of this expanding triangle is right here and the price is coming here, it's always going to bounce. Okay, so it is bouncing there. Now, somehow in about 6.5 minutes, this bar closes on its high. This is where we're going to test, and possibly here. If they come down and close in the middle of that apex and below that apex with a bear bar, then they can come back and swing it down for double bottom perhaps, or further down to sell. I don't have that yet. So now, is this still a valid Yes, it still is. We do have bar 10 breaching that, but if it fails to get a second bear bar, okay, we could still go back up to that target. See what's going on there? Bears are trying to get the second leg. They're trying to swing it high to the 98.25. Well, first here. So I didn't sell it. I didn't like the way the bar 10 closed, I have to admit, but I didn't sell it. I wanted to see what the bars are going to do. The 50-minute bar is going to do at the VWAP. So it pulled back. I knew they were going to pull back, but I said there are probably buyers waiting there at the VWAP, because that aligned very well with the apex of that expanding triangle. So this tells me if the bulls do close this bar on its side, this tells me 1 pullback, 2 pullback. We're going to get that third wedge top, possibly. Could be a short one around here or maybe here, and then it could come down again. So we have, again, overlapping bars. Now, bar 11 is high 1 or high 2. So say this is high 1 because it went above. And this really didn't go above the prior bar's high, okay? So the reason why I call this high 1, I'm counting because market made a new high. This bar is closed high enough for me to call this a good signal bar. So there will be probably buy orders 1 tick above waiting. It's a good signal bar, made a new low, but the body closed. So bulls are going to probably want to buy that, hoping to go test the high of bar 9. Okay, so there could be sellers there. This isn't that strong. Can the bears sell here? They're going to have to close this bar 12 all the way down here. That would create a second sell. First sell from the highs, technically, because think about it, bar 11 tested the bar 10 low, but it didn't close bearish. Now, bears are looking for a second sell, so they would want to see bar 12 close on its low. It's going sideways. If you are trying to buy this, your buy stop order is 1 tick above bar 11, safely waiting there. It did not get activated yet. Now, I would not want to sell is below bar 11. 1 tick below bar 11. It's a bull bar closed because bar can come in and fill your sell order and then go right back up and you'll be trapped, and you don't want that. So it's since bulls made a new structure, okay, high or just taking out the old structure high, right? So they're trying to get the second leg up. They're trying to swing this to here, to here, to here, and then to here. What can go wrong here? Well, we could go here very quickly and then come back down, because that would give us a wedge top. Remember, this is gap down and market wants that wedge top. And here is wedge top, right? So, or that 1, pullback 2, pullback 3, wedge top, and it comes down and tests these lows. So we could end up coming down and test these lows. It's not that strong. Test these lows, so we could end up coming down and test these lows. It's not that strong. All right, so you're filled 1 tick above 11, and your stop is under 11. You're buying with a first entry. And those who bought above it only made 3 ticks. They couldn't even make a 1 point. We're waiting for this bar to close on its high in 25 seconds and continue to go up, and it may not. It's just not that strong. If you have a breakout here and a pullback is not generating a good bull bar to continue, that should tick you, right? That should tell you something. I didn't buy above 11. I prefer the second entry longs. I say this all the time. Now, bears couldn't get their second entry short. That bar 12 did not close well, bearish enough, okay? So this is a breakout. We only have bar 10 below that, and no new bear bars. So this is still a valid measured move target. So now bulls are trying to get their second entry long. EMA is still the target, and right above EMA is magnet, and that could give us that wedge. So just be careful there. Bears want to double top with bar 11. All right, so now these bulls who bought here made money, okay? So you entered one tick above bar 11, you get filled at 81.25, 82.25, it needed to go to 82.50. Everybody made a 1 point, but they want more. They want to see a bull bar breaching the high of bar 9 and go on to those targets. We're not always in long, but these bars, okay, are kind of creating that always in long because there is a gap. Okay, so this is basically that gap bar, kind of a gap there, but we really need bars closing above EMA. All right, so we should keep pushing. I like to see this tested at minimal, but really my target is 38.92.25 midnight open, or a little bit above. Low of yesterday is target. Now, can we fail? Like I said, we could end up going up to 38.91 and then start to sell from there. That would give us a really nice wedge structure. 38.91. I like to see bulls. There's hesitation. There's no, oh, let's break out and get these buy to close bull bars and, you know, let's get to the 4,000. 4,000 is all the way up here. So I don't see it. There is a bear channel. See? Okay. We're kind of in the middle. I take that. Actually, not in the middle. Say this is your channel. See, if we do test, we're going to be testing the high of that channel. So probably sellers waiting there. So we have a second entry long now. If this bar closes high, more bulls will jump in hopes of testing above the EMA and possibly closing above the EMA. We're stuck inside bar 11's range. All of these bar 10, 11, 12, 13, these are inside bars. Okay, so they're trying to break out from the bar's range, which is bar 9. When you measure your scalp, first scalp is right there, but they're trying to get a full measured move, okay, from the range. So you basically take this, you take this, okay, put it right back. So this is where they're trying to go. A little bit above low of yesterday. But look, we just reached my target. we're going to start taking profit at 91, 38.91. We should test it. Like to see continuation into 38.91 and not fail here. We might even continue to go up to 98.75, 99 area, 38.99 area. Can they make it? We should be able to. I mean, it's just right there, 91. And it's my, okay, perfect. I got my 91. I scalped it. And we now have a wedge. You see how we're testing that line and coming down quickly? We're actually accomplishing something here. It's one objective and a second objective, but really this is where I would love bulls to test at that 98.25 to 99. All right, so let's keep going. That is the second leg. Machines do see the wedge, and they're wondering if they should look for some kind of overshoot. I mean, ATR is 10.25. So, but they see a wedge here. Now, if the upper wick becomes really long, that could be your third push high. Okay, so then I would do this. So I'm down with this. I'm going to get rid of it. That was really nice. Okay. I'm going to put a line here. Now that is a price point. I'm looking for bears to close bear bars underneath. If they do, then they're going to sell. And we could quickly end up coming down to bar 11 lows, bar 13 lows, and a bar 11 lows. Okay. It's possible that we could. See how accurate it is? So what happens to your measured move target? It's still there. It's still relevant, but it's just that I need to see what market is going to do. They're taking profit right now. Can they overshoot it? Sure. So, yeah, wedges, this is what I look for. Okay. Either overshoot, okay, or like this, but still comes down, okay? Or the second push is an overshoot. Okay, one or the other. One of these two will be, okay, so we do have an overshoot. You see it, right? Just a little bit, but it's there. Now, if they do close the bar, last second, there's still 1 minute, last second on its high, it could continue and get a better overshoot and actually meet this and then come back down. But this is why I took profits at the 38.91. And in fact, it actually went up to 3 ticks above my target, 38.91 3/4. So everybody got their scalp there successfully. Thank you, Brad, for posting that. We came very close to the midnight open, 38.92.25, always a magnet. There's still 5 minutes for this bar to close. If bulls do close this bar strongly high, we could continue because I need to change that. All right, so now we have a doji. I don't like dojis. Dojis are indecision. And it's a terrible sell signal bar, isn't it? I mean, but sometimes dojis do sell. They do weird things. And that's why I get very confused with them. But I'm going to mark the low of that doji anyway. Now, here's my problem with this doji. Because it is confusing, machines will look to see if we're going to start closing bull bars above it. That means we can go for a fourth push. Wedges can have 4 pushes. Wedges, go back to the lessons and you will hear Al say, wedges can have 3 or 4 pushes. Okay, so, well, this is a doji. It could be still part of the leg. Okay, it could be still part of leg, and this may not be the right high. So we might make a new high. This is why I get confused, and that's why I don't sell. It's not a good sell signal bar to begin with. And we're filling that. So if we make a new high, all right, so I'm going to put that 38.8150, the low of the new bar that made a high. All right, so now what? Well, I don't know. I can't make a decision. I'm going to get rid of this. I can't make a decision while the bar is still forming, right? I can't keep reading the bar that is going up and down and up and down. That's why you wait for bar to close. You get more information. Now, I measured my measured move with this breakout, which is fine, but you can also use this breakout. That would give you the low of yesterday, either or. Some machines are looking for a bear body that breaches beyond the bar 14's low and closes beyond the bar 14's low to start selling early with a stop above the bar 14. I don't see it. I'm not interested. We came very close to the area of interest. Although I have adjusted this area of interest, we might have already tested it, although I don't know. I'm going to redo this. So it was right there. Okay, I've taken that, but I might actually take this. See, we've already tested and we're bouncing, but this isn't really a good representation. I'm just taking to see if I can take these lows. I'm looking for more bars overlapping. See, there's a breakout and comes back down, breaks out and comes back down. So that seems to be okay. I might even take this. So I'm going to take this. This is the area of interest, and we have tested it. Okay. We could still continue to come back. It's the middle of it that I'm interested in. So I'm going to mark that. I think it was 38.13 before when I measured it, but I see much better overlapping bars areas. So if bears continue to sell this and the bulls cannot handle, okay, this weak breakout and they don't see any value, they're going to want to come down again, and we could easily test 38.1650. That's a lot far from now, but market has been bearish and we could sell, so be careful there. Okay, look what's happening here. Look where we're getting rejected. Asia high. So okay, so the market is seeing a wedge and bar 14. They're taking bar 14 as their base bar, made the last high, and they're trying to. Okay, so they did close a bar. Now this is a range here. I would prefer, if you do sell this, okay, that's fine, but be prepared. We might come back up here again before selling with a second entry. So because we have short-term trend is bullish, okay, if you mark that, you can look for a pullback and then sell with a second sell. That's much better, I think, sell in my opinion. All right, so because it's a doji, so I'm going to mark that again. Market could go up and test that 81.25 before actually selling. But if you did sell to close of 15, you're going for a 1 point. Okay, you got to make that initial 1 point. So if you did sell, say the close, you already made that. It actually made say 78, 76. It didn't make 2 points, but it made definitely more than a point. So that was good. But because you're selling into this area, I just don't like, especially bar 14 is not a good sell signal bar. I probably wouldn't sell one tick under. If you did sell one tick underneath this bar that closed, the first sell, okay, bar 15, did you make a point? That you would have gotten fill at 77.50. 76.50. Now you made it. Yep. So you made the 1 point. Now it's selling. See how it just pulled back to that level? That's a pullback. I don't care what you say. It's not like that. It's probably going to do that again, but that right there is a pullback. That wick was a pullback. But those who actually now sold 1 tick underneath bar 15 with a sell stop order made money. Right? Look how much it moved. But will they sell it all the way down here? Are they that strong? I just don't like the bar 14 for strong swing sell, you know. I need to see good bear bar closes. Okay, so bar 15, think about bar 15, okay, as like a breakout bar, right? So it's breaking below that bar 14. It didn't break down this structure. But if this bar closes bearish, okay, we know there's a gap here. Bears are trying to fill this gap. Remember what I said earlier. Okay, we had some kind of structure here we broke down, and we're trying to change the sentiment here. It kind of changed here, and we got a continuation. So market might be, instead of selling this all the way down here, market might be looking for some kind of gap area to buy. That gap area is here. That's the first buy, and the second buy could be down here. So there will be probably a bounce here. Because why? You have 3 bull bars and a continuation with a second leg. So that makes this area a good buy area, okay? That's your first buy, probably buyers waiting there. Now, some machines, they might enter with a small lot there and then see if the market actually bounces and continues to come down, and then they might buy again underneath with a second half of their buy orders. All right, so it's coming down. So those who sold underneath 15 still making money. Their stop might be above 14, probably it is. Now, I wouldn't sell a doji underneath a doji, but if it's a wedge, you know, and it's a small risk, right? So you're looking for a 1-to-1. We just got the 1-to-1, and that's why we're stalling there. That was a 41 ticks. Now, it's going into the gap area, gap from the high of this bar to the low of that bar. Or you could say, no, that's not it. It's right here. Okay, fine. That means we could pull right in there. So this could still sell, but we're at the 1-to-1 target, those who actually sold underneath. Okay, this isn't really calculated. This isn't the best measure, but it gives you an idea. You would sell 1 tick under, so you would have to put that into consideration. So that still gives you a good extra tick or two to get filled at that level. Now, that right there is that bar 17 is basically the take profit bar. Or you could say this is going to come down more if this profit takers get out of the way, because we got 2 bars and we have a gap. Fine, there's a structure here that the bears are trying to break, because actual buy is right there. So they see this area closer to the 2-to-1 target, okay? But there's nothing breaching or closing beyond the bar 16 yet. So it's still a pullback. It's still a take profit bar. Can the machine sell this as we get back to this area? Sure, we could go back. We might sell again. So that's why I have that 81.25 is there. It could go well inside here before selling. Now, bulls, on the other hand, looking to see where this bar is going to close, right? So you have a new high. Basically, you're looking for a high one. This is a beautiful bar. This is a signal bar. Look at the bar 17 low, breach the bar 16 low. And if it closes high, it's a signal bar and it's going to become a trigger bar, kind of a trigger bar. The high is not breaching the high, but if the body really closes up here, more it closes on its high, some bulls will jump in and buy it. But it's really dangerous because we don't have any bull bars closed above the EMA, so that doesn't make us always in long. But when you look at these three bars, and one of them actually gapped up, okay, and it got a continuation, even there was a gap right there, it's telling me that the bulls are still trying to get above the EMA. So I don't know. If I'm going to sell, I want to sell the pullbacks, right? So 81.25 and above, I would look for another bear bar close below the 81.25, a strong bear bar. That would be what I would be interested. But right now, I know that these bears sold, taking profit, and the other bulls might have joined to buy, and that's why they're pushing this bar 17 higher and higher. Now, if this bar closes higher, okay, it's already a signal bar. It's trying to become a trigger bar. It'll trigger as soon as it gets above 16. And bears may not sell until they see another good sell bar closes below 81.25. And if they don't sell, then more bulls could jump in and buy, and then we could keep going up. Can we get this is too low, okay? So we're in some kind of discount area, okay? So premium is all the way up. If this is too low, okay, and the bears are not selling, it's because they're trying to sell the pullbacks, right? So what maybe they're looking for? Well, we do have a wedge. They're looking for a double top lower high to sell to swing it down. Can the bears get a good swing entry? Sure. But right now I'm not interested because I need to see what will happen at 81.25. All right, so bar 17 closed slightly higher than its mid-level. That makes it a bullish bar. But it didn't close the way I want it to close. It's still a high one if you're counting from here. But the bears, disappointed with second sell, might be trying to get the third sell. I don't know. They're trying to get a second leg down. 14, well, really the 15, 16 first leg, pullback 17. They're trying to get a second leg down. Now, here's my problem with these bears. If they cannot close this bar, they could get trapped and bulls can take this up right here. So I don't know. They're trying to sell. Bulls did not do a good job. You could see this breakout failed. I removed that measured move target. They failed again. Breakout failed. So if I want to be a bull, I want to see good bull closes stacking up. So I didn't sell anything. Now, limit order sellers might be here. Some try to sell the close of bar 17. Why? Because it's still a limit order market. Bulls both the bar 16 close, which is a phenomenal bear bar, right? But if the bulls are buying a close of a really strong bear bar, that means the close of a semi-okay bull bar. Why is a semi-okay bull bar? Because the body went and closed beyond its midpoint, so that's still a bullish bar. But they're going to sell it anyway. So because this is a limit order market, so this is limit order trading right here. So it's a mess. I am not selling this. And if I do sell it, I would grab maybe 1 or 2 points and get out. because suddenly this can move 9.5 points up or down. I mean, if it moves down, that's great. Your runner would be running, but if it moves up, you give everything that you made and then some. That's why the limit order trading is difficult. You have to be quick about it. There's a gap here, okay? Buyers are waiting there. I know they're waiting there. And they're also waiting down here. High there, okay? So we could come back here, pull back. Then I would look for some kind of swing long. So there's a gap there. Bears are still trying to close that gap. So what can happen here? Can we come down and break below the Globex low? Sure. But if we do make some kind of a double bottom, bulls are going to want to swing, and that could be around here. So market made a wedge bear flag, and they're trying to sell. Bears want to come down and test the bar 6 low and have a breakout bar and continue to sell with a bear flag. You could also say, well, this was my first bear flag sell from the EMA, and this is my second if it closes like that. If it closes with a small little wick underneath with a strong bear body, that selling could continue. So I'm going to mark that. We could dip right there before bouncing, okay, or buyers waiting there, a little bit below maybe. So they're still selling because they're trying to close that gap. Now, we could sell all the way down, be careful, 38.64, okay? We might trap the bears. Be careful there. If you're selling, you have to make sure the latest 38.64, you may want to take profit, okay? But if bears are strong, they could continue to come down to 61.50, 25 area. We've gotten so close. Bulls are still trying to keep that gap open. But it's a mess. Alternating bars. Breakout didn't yield anything. This was a pullback. Okay, fine, it's coming down. But why is this bar not closing? Bar 18 needs a bear bar. I'm not going to buy that unless it closes really strongly bullish. I would prefer to buy down here. So let's just wait. At least the 63.25. Test it and let's see what this bar does. There's a wedge here. Down, up, second down, second up. We need the third down. So now you know why I'm anticipating this to move down a little bit more. At least to 64. If the bears are going to get trapped, that will be a good place to get trapped. Or it's going to continue to come down to 61.50. Now, why is that? Remember what I said about bar 9. We are stuck inside the range of bar 9. Did we break out successfully bullish? Yes and no. We broke out, yes, but it's not successful because we don't have a bull bar closed above the range of bar 9 high, right? If we had a bull bar closed, we would have been up here already. So machines see that and they see this is no good. It adds up to a wedge and a failed breakout. So let's come down to the 50% of that bar's range and let's start to break down and make money to the downside by selling. So what does that mean? That means I'm looking for a bar that closes below the low of this bar's range. If I get that bear bar, these are going to be my targets. Trap, target, target. That's why I am bearish. Okay? We still have not broke the range of this bar, okay, low. We're still stuck in it with all these bars. There's no breakout. That makes it a structure, okay? So I'm waiting for, and plus there's 1, 2. Look at these bars, strong, higher than its mids or mid-level, and it's a strong follow-through. So we know limit order buyers are waiting underneath here. It's also a gap close. So the bears are trying to close. So why is this trap? Because limit orders are stacked here. We're probably going to test right there. You see that faint line that I put in there? But the bears want to come down to here. That would be their reward, testing and then bouncing. And if they do close a bear bar where I'm this solid red line, we're going to sell into here, which is a buy zone. That's where I want to buy. So I see continuation, okay? But there are limit order buyers sitting here. So because of those limit order buys, there's this gap, that tiny little bull gap. As long as it stays bullish, bulls are going to look to buy. Why? Because this is the first buy zone after all. There's a gap there. Remember I talked about if structure is broken, but we don't stay too long and we make a new high. There is, think about it, there's a pause and a breakout. That pause and a breakout area is the first buy, but then the second buy for the swing. And that is the first buy. That's where the limit order buyers are waiting. That's why we're stalling there. But bar 19 is not a good bar. Now, bar 18. We don't have a big range, okay? We're going to get a good breakout. Look at this. This is only a 38, almost 39 point range. Well, I guess it is a good, it's not really over 40, so it's not that big of a range. Now, can we get a reversal here? Is this a good place to reverse? I don't know. I'm not really excited about bulls reversing here. To be honest with you, I would want to see maybe 3 bars closing on their high stacking. Well, the bar 19 is not a good close. Bar 18 is already fizzling. But I can't really judge a bar. It's fresh. It's only been not even a full one minute pass. So depending on how the 2 bars, if bulls really want to buy, they're going to have to show me good, at least next 2 bars. This bar, 20 and 21, close on its high. But if they can't, then I have no reason to buy this because this can come down a little bit more. But there's a wedge here. You see it, right? 1, pull back, 2, pull back. We're trying to make the 3rd push down. So wedge is not complete. Bulls are still trying to buy due to that first buy area, but they fail to close it because bears fail to close it because bulls are trying to keep it open and swing again. But I don't know. If you bought this, then you're thinking, you still have to think that this could come down for the second time. That you shouldn't have entered with full lot here, okay? Then, okay, well, let's see. 1, could that be because it pulled up so much? Then here's a wedge. So this is the actual wedge. I don't know. I don't see it like that. If I cannot see something, if something is not sitting like a duck, it's probably not a duck. Okay, so I can't really call this a duck and buy it and hope for a swing when I have much better area here. I'm really exhausting my, you can see I'm struggling, right, to be a bull, to go long. if they close this bar on its side with literally no wick or like maybe a 1 or 2 tick wick, then that's fine. I'll believe that we're going to go back up to 81.25. But I mean, this doesn't look like a duck, and I don't want to shoot my dog. Okay, so let's not kill the dog. That might look like a duck. You see where I'm going with that? I'm the worst hunter. I can't hunt anything. So the only thing that I can hunt is a bunch of bars. That's it. Thank God for the stock market. Exactly. It's probably not a duck. Friday. Come on. Whatever happened to the exciting volatility of, quadruple witching? The price action will surprise you. It'll do what it wants to do. So don't rush your trades. Take good trades. So if you sold bar 15 because that was a good signal, even though the bar 14 was really horrible, but still it made, rules are rules, right? My rules are so simple when I'm selling and buying wedges. Signal bar, nice trigger, or you could just sell the pullback. You still make money. See, this duck is not a duck after all. You probably shot your friend right there if you try to buy that. So, confusion, yes. That's it. That should be added to the course in a parentheses. This ain't a duck. Signed by Rose. So, can we get a double bottom and get a nice bull flag? Sure, right? So we could, I think we're going to close this gap and we're probably going to test this here, right? So, or we're just going to come all the way down here. That's where I'm going to be looking for maybe a swing long. However, if we do not get that swing long, bears are looking to break this structure, okay, and then sell. Because why? Because this is still a bear flag, guys. Okay, bear flags can get a measured move down. Now, how do I know that? Well, let me show you. Of course. Hold on. Give me a second. Get rid of all of that. Are you kidding me with this? Okay. It just went black again. Give me a second. Okay, that's better. I didn't select that template, but I don't know why it does that. Okay, so here we go. You got a kind of a bear flag here. However, it's not that strong of a bear flag. Bears want to test here, but buyers are sitting here. So this bear flag can either break out with a strong bear bar, or it's going to come down here and start going up. It's going to bounce there, and the bear flag will fail. So it is possible. So I have a triangle expanding. Now, for the sellers, take that and try to, okay. So we're right at the apex, as you can see, right? Right there, this is the middle, the center of this expanding triangle. And you can see that we're bouncing. But if we start the print bear bars, we could come down here very quickly. Or we could get down here and then fail to test and then go right back up. That would be a swing long I'd be looking for. Now, right now this area is holding. Try to, get these exercises. You're going to find these structures very quickly. This is where the bear flags failed, these apex area. Okay. Sometimes it comes down right around here and it fails. That's a failure of bear flag breakout continuation, and then we could get a reversal. So I'm looking for a wedge, okay? Or you could say, this is a mess, right? We have structure broke, came down. Here is another, we got a continuation, right? And then we went up. Sentiment changed a little bit. You could see that it has changed, right? But it needs to change. I would say it would change for the bulls if I see bulls actually start to break out. This, I would be buying every pullback. We don't have that yet. So that's why we're struggling, okay? Bulls are still looking for a good place to buy. They do see this, okay? It's still okay, sentiment change, because that structure broke. That one broke with a bull bar closes. That one didn't really. So now they're looking to see, can we just buy here? This is that first buy area. But this is what I'm interested, this whole area. This is where I want to swing long, if they give me that. If they don't, I'm not going to rush my buying, because bears are still trying to break this and come down to these levels and eventually here. And if they do it very strongly, they could actually break down and get that measured move target to the downside. I won't mind selling that, but look where we're sitting. Look where I am flat right now. This whole area. So if you cannot see it, then switch to your ETH and you'll understand why all of this mess is happening. We also, have you noticed what just happened here? We failed to break out of this big bar. We're still inside this bar's range. We still have not broken out of it. Buyers are showing up to trap the bears there. So you have 1 pullback, 2 pullback, 3. Is this a truncated wedge? Yes. If this bar closes bullish, then we have a truncated wedge with a higher low. Look, you see what I'm talking about? 1 pullback, 2 pullback, 3, exactly the same level. That high, lower, that low is higher than that low, so that makes it a higher low. That's your second entry long now. Now bulls jumped in. First entry long, second entry long, they're trying to get to the EMA. We could not even break out. Bulls are maintaining that itty-bitty gap right there open. Good for them. Or you could have said, well, maybe the gap is here, from there to there. That's a bigger gap, right? So let's see. If they can close a bar finally above EMA, I'll say, okay, we're becoming, always in long, but we still aren't. We do have a gap bar, gapped up, and that gap, they couldn't close it. There's no body overlapping with the close of bar 8. So that's why bulls might get a chance to actually close a bar or two above the EMA and become bullish. Now, this is now looking like a bull flag now, isn't it? I said, I'm looking for a wedge and a double bottom and a higher low. Well, we got that. So will there be some sellers show up at 81.25 and prevent this breakout? Possible. Remember what has been happening here. Just take a look. Bulls failed to break out, failed again. Bears sold it. Do you think they're going to sell the EMA again? That's what they did yesterday, right? Sold. We became always in long, but no breakouts. We actually ended up this whole area, okay, from there to there is a sell zone, right? They sold it. Look, gap down. This is a gap bar, probably a flag formation. They're going to sell it again, right? And then they sold it again after hours. So we have another flag, but it's not that strong bear flag. Could that be now some kind of a final flag for bears? That means triangle? Sure. So I'm flat. I don't like what's happening here. I don't like, I'm not after a couple of point scalps, not when I'm talking. I'm looking for a good swing setup, and I don't see it. This has a potential, but still is not the area I'm interested. It's a second entry long, but it's under the EMA. There's a, on the 15-minute chart, you have a bull flag with a micro double bottom, and buyers entered right there one tick above the neckline, and they're hoping to get back up to here again, to the highs, the prior highs. All right, so another bar failed to close above EMA. It's a failed breakout yet again. Some bears are trying to sell the EMA because they have done it successfully with 2 legs. So they're going to try again. Like I said, pay attention what's happening, what has been happening at the EMA. Now, if the bulls finally start to close above EMA, then yes, then we come bullish, and we're probably going to get back up to this high. So you can either keep this as your threshold. We are still bearish. See, I said earlier, if bears want to sell this all the way down here, the reason why we're pulling up and they might be selling up here, it's because this is such a discounted area that buyers are not able to buy in a discounted area. It's because bears see it and they want to sell the pullbacks, and that's what they're doing. The market is bearish. So they're selling with the pullbacks. I didn't buy it. I didn't think it was nice, the second entry long, but it didn't close above the EMA, so, and there was a strong sell with 2 legs. I wasn't really interested, so I didn't. Now you're getting a full rejection bar. Bears still want to close that gap. I want to buy down here. Can the bears, can these bulls actually trap the bears last second? I mean, that bar is pretty strong. It's trying to break below and get a possible measured move down into here. So I'm going to wait to see how this bar is going to close. It's trying to come down to 63.25. They're still trying to break the bar 9 range. Now, if you actually put a box, okay, bar 9, mark the 50%. Look, we have been getting rejected at the 50%. We have not gotten above the midpoint, the 50% of this bar. We're still stuck here. Now, bulls could get excited and start to buy if this bar suddenly, the last second, ends up closing up here and we get a new bull bar close above, and then we could break out. I'd be interested in that, but right now we haven't. We're still below that 50%. So bears are still trying to break out with a pullback to EMA and come down to those targets that I called about. 38.64, 61.50. All right, so let's see. 38.64. See if we can actually finally close this body, bar 23, below the low of bar 9. That would be finally a breakout for bears, an actual breakout. But along the way, they need to get rid of this, finally close this gap. Gap is still open. And then get to 64 and move underneath 64. I don't have a bar that closed yet, so it's very difficult to say bears are going to get there. 30 seconds left. Right now, it looks like a rejection, but you don't know how that bar is going to close. It's very important that you wait. You should not be using on ATR should be on calculate on each tick because you want it to be accurate, but you shouldn't be using any of your indicators on each tick. It'll slow down your NinjaTrader. Price on change is fine, or bar close is better, but it will be behind. Price on change is a lot better. All right, so 64 is still the target, 63.25 continuation, but really the 61.50 is the actual breakout target. I don't have a breakout. Bar 23 failed yet again, so there's no breakout. Bulls are still trying to keep that gap open. But you have a really nice bear bar, 23. Unfortunately, it's overlapping. Bunch of bars are overlapping. So no decision has been made. I'd like to see this move down into that yellow box. And this here. We're in a tight trading range and market is trying to decide. Bulls want this higher low and a trend reversal up and finally start the swing. So they're going to have to now undo. So we have outside, inside. I don't know what this is. So what, I mean, it's going to break out in a way. We have an inside bar now. There's another bar that we're stuck in, but this is the one that hasn't been invalidated yet. That means we have no valid breakout with a body close outside of its range. So we're still inside of this bar. All of these are inside bars, basically. Okay, so it's going sideways. I mean, it's better. If bulls are not buying here, that means one thing. They're not thrilled. They don't think this is good to buy. So bears are going to probably exploit this. And we might come down here and here. This is where I'm going to be. Maybe underneath here, I'm interested in buying. Okay, so I want to see bears get serious here. Can the bulls actually show up here? Well, they're going to have to close that bar 24 all the way up top and completely eliminate the bar 23, which is a bear bar. They don't look like they want to do it. So targets are still 64, 61.50. If they break below the 60, if there are no early buyers at 63.25, we're going to keep pushing down to 61.50 and into here possibly. We might even come all the way down to 53, 53.70, 54, 38, 54. But I need the bear breakout body. It's boring. Boring for a quad witching. So I'm just going to scalp until I get a good swing. So I'm still holding for the 64 and continuation into 61.50. Possibly take profit at 61.75, one tick above 61.50. See if we can do it. All right, so I'm going to scalp the 64.25 if I can get it. You see what's going on? It goes up, comes down, goes up, comes down. Some of the orders being observed here could be the buy orders, that bears might be observing those orders and trying to observing them and come down. So, okay, still no bear breakout. Look at that right there. We need that bear breakout. So we might break out briefly and tag that 64 and come right back in again, or we're just going to fail here. Yeah, okay. So failing, maybe the bulls were actually observing all those sell orders. See, we did not break down. That gap is still open. I'm still short. I still want my money. So just calm down already. It's a big fight to keep this tiny little gap open. Look at that. That gap right there. I mean, there's nothing much left. They actually closed it a little bit. That's all there is left. So it's, might as well just close it. Let's come down here, 63.25. So I'm going to scalp the 64.25. And my continuation target is 61.75, but it's actually 61.50, but I'm going to grab that one tick above and just get paid for the Friday. I'm thinking sushi and sake for tonight. So I need the money. Oh well. But no, this can turn around and go right back up. So be prepared because, all right, so the gap is closed. See what just happened there? Kind of, it closed. Get rid of that. But no bear bar closing outside this bar's range. Still, bulls are fighting. Still, they are fighting. We should be able to get that. Bears are still getting rid of those buy orders. We should at least get that 64.25 and then continue into 61.50. Still fighting. If they cannot do it right now, I'm going to exit out. I don't want this bar to close bullish. If they close this bar bullish, I'll exit out. I'll exit out. Because I don't like it. It shouldn't be this difficult. Bulls are still looking for that, okay? Now they have a wedge. You see 1, 2, and 3. They still want that bull flag. And this is very painful. And this is very painful. See, it's failing. It's a failed breakout. See that failed breakout? Just like we had here. I'm going to wait for this bar to close. It's painful. Better to wait for the bar to close outside if you're going to sell it. So you don't have to go for this back and forth. You need that signal bar. Signal bar would be bar 25 closing outside with a body. So we need a bear close below the 66.25 to continue into 64.25 and 61.75. I thought today was going to be, we're going to get big moves, but that's not happening. It'll happen. We might end up getting a big move. Let me see. Sometime a swing might set up around, what bar is this? 24. Okay, so the second hour is over. The third, okay, so we're in the new hour. Might end up getting here. Bears are failing. But I'm going to wait just a little bit more. I don't like the way this bar closed, but this is still a much better area to buy. I want this to be tested 63.25 at least, but really I want the price to come down here. 64 is still the target, and 61.50 is still the target. but these bears need to close this bar. This is their last call. Now or never. Okay, here we go. Yay! 64 is still the target. It might bounce there. Be careful. I'm at 64.25. I want to scalp that. Oh, it just tagged me and didn't fill me. I've been sitting there. But continuation to 61.50 is target. So see how it just tagged me, 64.25. 64 is still the target. I was right with my calculations, but I guess I was behind the line because I moved it around a little bit. So that's what, if you put your order somewhere, don't touch it. Don't play around. Okay, 64, we got that. Now the next target. Now the next target. Give me my money. 61.50. I'm at 61.75. Woo! Oh, I hate when this happens. It just tagged me. Again, great calculation, but it didn't fill me. I'm behind the line. All right, I got it. Oh, come on. I got my money. All right, so now we're coming down to where the bulls are actually sitting and waiting. Oh, my goodness. Oh, that was, I'm telling you, I sweated there a little bit. That, you know, I don't know how big that line was, but it was a big line. I got it. All right, so that means sushi and sake tonight. I'm loving it. Good Friday. I mean, you're going to get these lines. You know, I thought I was being smart and literally, you know, being one tick above the target line. I hate it because it struggled so much. But look, we finally broke that. But that bar hasn't closed yet. There is still 39 seconds. But this was the target, so we reached that target, okay? Now, if we can actually close this bar below 61.50, we're going to come all the way down to 53.75. Or say 54 rounded out. So this is a potential now coming to 54, I'm going to say 53.75. But they need to close this body. And that 53.75, 54 should be in the back. As long as the body closes, we might pull back a little bit, but we will sell into that 64. Now, they couldn't close this body underneath 61.50. So that's a problem for bears. But it's still a really nice, strong bear body. Now you have another wedge. Now, this isn't how I count it, and this is a bull bar, and we made a new high, so I don't like to count it like that. Okay, so I would say, if I'm looking for a larger structure, then maybe 1, pull back. 2, no. This is a wedge failure, okay? Failed. It's breaking, so we might have a measured move target. I'm going to measure that for you, and I'm going to put it on the chart for you. So if I take it from, I'm going to take it from here. That's, okay, it's right on the same spot where I actually marked it. Okay, so we're pulling back because, why are we pulling back? Because that body did not meet my criteria. It did not close below the 61.50 to sell quickly. Now it's pulling back. There are probably sellers at 38.68 where it broke down, which is right here. You can mark this, but I'm going to get rid of it. So this right here, the breakout area, we're retesting that, okay? Probably sellers there to sell it right back into 53.75. So 38.66. Don't you love it when that happens, Shuki? But in my case, it would be a losing trade because I was actually winning, but it happens to be a sim trade. I had that many times. I was like, oh, great, I just made $1,000. And I go in to look at it. Oh, it was in sim. Darn. All right, so 38.66, I said sellers are probably there. They can sell about 7 or 8 points down. So 38.54 is still valid, but I would need this bar to close below the 66.25, below the close of 26 to continue. It's still a pullback bar, okay? And this is still a valid bull flag. Bull flags can be like this deep, okay? And suddenly we get this very big squeeze, all right? Because there's a wedge here. Okay, think about it that way. And take that. Or like that. Right? So we're squeezing. Where are we going to squeeze out from? I like this to squeeze out from here, then give me a double bottom, and then I will buy that swing if they give me a good swing. But I'm not interested in buying right now, right here. But this is still a bull flag. It's just a deep pullback, okay? Now, I'm going to put this resistance line because if I see bulls start to break this line, then I will know it's not like this, so it's like this. Once we start to break above it, then I'm going to look to buy. But right now I have no reason because the continuation target is still at the 38.54. There are probably buyers waiting at these lows. We might breach 2, 5, or 10 points before buying. All right, so now for limit order, I don't know if anybody tried to buy under it. We're testing. So here's what I'm expecting. If bears fail to come down here, which they should, it shouldn't be a big problem. Should come down all the way. I'm still going to look to buy. So I'm not interested in buying right here, right now, unless they break that upper trend line, okay? And then they come back and retest and then buy strong with another bull close, then I'll buy. But I have no reason to buy here. We have a breakout, okay? We have a pullback. Now, if this bar closes bearish, then it will sell. All right, so now the target that I read, the 54, is no longer valid because we have a strong breakout. We already got that target, but now we have another bar, another inside bar. We're stuck in it. So look, and we have an IOI. Bar 25 is inside, bar 26 outside. So we have a breakout mode, okay? This could actually end up reversing if this bar closes, okay, back up here. We do have a bull close, but it didn't close really higher than the midpoint of the outside bar, but it's a really good, strong bull close. Now, I don't know where this is going to break out. I still want bears to continue to come down. Now, I'm thinking, if bears want to come down here, they're going to have to close a bear bar underneath the bar 26 low with a bear body. Or if they want to buy, they're going to have to close a bull bar above the high of 26, okay? Then it's going to go up and up. So this is no longer invalid. That has no relevance. All right, so we're still working it down into that yellow box. I'm not interested in buying yet. IOI is a breakout mode. 25, 26, 27. It's still coming down, still working its way down, but it will reverse. Now, can it come down all the way to 38, 16, 50? That's kind of quite far away now. I don't know. That would be a bear breakout. I'm not expecting that. All right, so another inside bar, 28. Now we have IOI, but 28 hasn't closed, so I can't really call it II. But you could tell, you know, I don't need to call these, so you know that there will be a breakout coming up. Is this good enough for bulls to actually buy? Possible. But they need to show me some good bull bars. Now, what am I seeing here? Right? So bears try to sell, fail. Bears try to sell, fail. If I see a strong bull bar, I will buy it. If I see a strong bull close, I will buy it. But right now, I am null. I'm partial. I can go either way. I'm flat. Bears probably want to come down and test where I marked, but I don't know. So we did go up above the EMA and failed in coming down to the lows, So I'm still accurate with my assessment, but buyers can show up here still. Okay. Would you have a wedge? Look, wedge. Now, can we get this? See, that would be a bear breakout that I talked about. So this whole area would become a measured move to the downside. This is a structure. If the bears do break that with a bear bar, okay, I'm going to look for that measured move target, okay, and then a small pullback bull trend later, but it's still a bear flag. So that's one thing, but this is also possibly a bull flag too. Now, I'm not ready to buy it. There's no strong bull bar closing on its side, okay, like this. See that? Oops, not that. This right here. Bears tried once, bears tried twice, and trapped and go. Okay, even here, bear tried once, tried twice, and a beautiful bull bar. And you can buy that as well. I don't see it, do you? Testing the trend line. That's actually the fourth touch. So maybe we get that bull bar. I don't know. Okay, so now they're getting it. Okay. So I guess the buyers were here then. 3 bull bars we get, we're probably going to get continuation. So maybe the buyers were right here. Did we test it? Yes, we did. But I don't know. I'm just not. I need to see the bull close, and I need to see close above EMA. So I'm going to still keep that as is. Bulls will show me whether or not they're in the market, right? So I have to wait for bar 29 to close. It seems nice. If they're ready to buy now, sure, I'll buy too. But at least show me an always in long bar closing above the EMA. Because they can trap me here as they trapped those buyers before, right? They trapped them here, they trapped them there. Sold first entry, second entry. Sold again. So how is this any different? You wait for bar to close. So I'm waiting for 29 to close. Now, if they do close it, then you have wedge, maybe a higher low, okay? We could end up going first to here and then there. Okay, so I have this example right here. Okay, so looks very similar, right? But they still did come down to the low. And then finally, look at that beautiful bar right there. That's the kind of bar I'm looking for. I don't want to see an upper wick. Or if there's an upper wick, it has to be tiny, tiny, tiny. So this looks very good, but because it's a trading range, it could still come down and retest, and I don't want to be stuck in that before going back up. All right, so we are breaking the trend line, There's about 35 seconds left. We should be able to close at or around the EMA. Better if it closes above the EMA. See how the bars start to stack above the EMA, and then the first pullback you buy, and it's a small pullback bull trend for the rest of the day. That would be nice. We could buy and we can hold. Failed head and shoulders pattern. Failed head and shoulders pattern. That's also a failed wedge. So there you go, right? And then you get a wedge right there, and then small pullback bull trend for the remainder of the day. All right, so we have a really nice close, but it didn't close above, but it's a gap. Do you see that gap bar? It created a gap. That means it's an early always in long. Now, the always in long will set up as long as we close above it. Now, I look for signs ahead of the close above the EMA. I look for a bar that has a gap body like that. See that? It's right there. All right, so let's see if we can actually finally get some kind of small pullback bull trend to begin. Or we're going to get another bull trap at the EMA, and then this time we're going to sell pretty strong. That's still possible. Bears are still trying to close every gap that they see, but if this gap stays open and we get above the EMA, then we have a possible small pullback bull trend begins. And these setups could happen at the end of the second hour. And we're already in the third hour. So the hour is young, and this is where probably small pullback bull trend might be starting. 3 bull bars. We just need that close. We do have a trading range, so don't discount that, okay? We are in a trading range. I don't care what it looks like, but it is, isn't it? You might say, well, we didn't make a new low. Well, we could make a new high, but we're in this trading range. All right. So this bar, 29, did not close the high of that range. It failed, but this bar is trying to close to get to the first target. Okay, it's rough. So for bulls, there's no signal bar. We're still stuck in that bar 26 range. They're trying to break out. The first target is 74.75 for bulls. We'll probably go on to test 75, but they need to close. And if they do close a good bull bar, it's possible that we could end up going up to 38.79. I need them to close a bar, otherwise this can just collapse right back down to this trend line. I warned you, if we have a breakout, we might come back down, eventually test this before going back up. Bulls need to keep that gap open if they want to get always in long. So for bulls, first shallow target is 74.75, and an actual target is 38.79, and then further breakout target is 83 or 83.25. So if this is a small pullback bull trend, now is the time to get going. Okay, I'll stay another 10 minutes, but then I'll go. To make up that time lost. Okay, excellent. I have scalped the target that I called one tick below, but it's probably going to test 75, so you can say, okay, we just tested, great. So the next target now is 78.75. All right, but you can take profit at early at 78.50 if you like. Let's see if we can get there. Beautiful 4 bars. There's still a triangle here, guys. We're kind of breaking out of that triangle, I guess. Yeah, we just break out. Okay, so we have a nice breakout. We should be able to get to the 79, 38, 79, maybe a little further up. It's taking profit here because bulls move the market 15 points right here if you measure, or 10 points above here, I think. But let me see. If you bought above here, no, that's not even 10 points. So we should get going. We shouldn't collapse here. It's the trading range highs. This is what the machines are seeing, getting spooked right here. But if you actually measure from down here, that's the 15 point that I've been talking about. So they're taking profit. That's a profit taking bar. We have a potential of going to either here or here. So I say we're going to keep pushing further up is after this profit taking ends. So that's one. And then 80, 50. So somewhere here we might tag for bulls to, but that profit taking needs to end. And if the bar closes, this bar 31 closes weak bearish, more bulls will jump in possibly. But right now I'm flat. I scalped that area I talked about, which was one tick below the 75. I said it'll go to 75. It did. It actually went above it. And that's where the profit taking began. But it breakout is not that strong. It's also the triangles when they break out, although these are really good breakout bars, it should get continuation. When the breakout happens from triangles, it likes to go back to the apex of the triangle again. Now, 15-point move up is a significant amount. So profit taking now attracting some of the sellers. I'm glad I actually scalped. I told you guys that you should have scalped, but if this bar closes somehow on its high or mid to high, that makes it a weak bearish, I will look to buy again. But I don't like this at the moment. It's still pulling back. So if this is a small pullback bull trend, it's possible that the bar 31 is your pullback bar. And if the next bar ends up being a bull bar, so that's your first pullback, and bulls are going to buy the close of that bar or underneath the bar or the mid, whatever. And then if you want to wait before buying again, you want to see a bull bar again, okay? So then you get a full confirmation that we are in a small pullback bull trend. I don't know that yet. We're still stuck in this trading range. We have a good leg here, 4 bull bars, but breakouts are weak. But look at the last time what happened. Did bears ever gotten a consecutive 3 bear bars ever? No. Did bulls get consecutive bull bars? Yes. Did bulls get consecutive 4 bull bars? Yes. So bulls are actually printing a lot more quality bars back to back than the bears. So I don't know how bearish this is. So this could be that first pullback in the small pullback bull trend that buyers might buy this bar's close or underneath or at the week. We'll see. And especially if it closes on its high, there will be more bulls jumping in with a second leg for a second leg target to go up to here. So I want to buy, but I'm going to wait for this bar to close. 29 seconds left. Yeah, I mean, I don't know. I heard Al over the years looking at these bar counts, and he looks at the quality of the bars and how many, he likes to call the bias, but you're only going to call the bias if you see failed breakouts for bears and they're struggling, and he looks for these consecutive bars. So I made a mental note. If I'm going to get a bias from something, that's how I'm going to read it. All right, because listen, it's all confusing. It's going sideways, but look what's happening here. If this is a small pullback bull trend, start of a small pullback bull trend, they better close this bar bullish, okay? Then we could end up going up to 81 or in between somewhere here and take profit there. All right, so I'm not going to call this a small pullback bull trend just yet because I don't have a confirmation. Pullbacks can be 1 bar or 2 bars, 2 bear bars. But higher the bar 32 closes, more bulls will jump in. Now, if you are trying to buy a small pullback bull trend, where would you buy? Limit order, you would buy somewhere here or underneath here, so you get like bunch of bar, the orders set up, right? So you're going to get filled. Or you're going to put a buy stop order at the high. Go watch the video. It's all explained in there exactly how to buy and sell. Okay, small pullback bull trend. If I want to buy with a stop order, this is where I'm positioned. Okay. Or I can trail it down. As soon as this bar closes like this, I can trail it down right here 1 tick above, and it gets up, it fills me, and I go. I get a better fill, right? Rather than sitting at the top of bar 30. So that requires sitting and waiting, and there's nothing wrong with that because you don't know that this is a small pullback bull trend. You know this looks like a bull flag, but listen. Okay, it sits like a duck. It looks like a duck. Is it a duck? I don't know. I don't want to say something. I mean, I could crack jokes here, but then it becomes political, you know. I don't want to be the next Dick Cheney over here. So let's just wait, okay? Let's make sure that this is a duck. As soon as this bar closes 32 bullish, then that's it. This is your pullback, weak pullback, and the buyers jumped in with limit orders underneath at the wick, or some orders are left behind down here. This is where you want to actually get filled because pullback can be a 2 bear bars. Remember what it says, 1 bar or 2 bear bars. Okay, so and there are probably limit order buyers underneath 31. Or what would Brad say? Well, the 50%. Buy the 50%, right? So he's all about 50%. He's a 50-50 guy. I'm just kidding. I hope he's not listening. I haven't bought anything because the bar hasn't closed yet, so I'm still waiting. Okay, 2 more minutes. I'm going to leave the session open because Brad will come in. Okay. Now, can this fail here? Look what's happening, guys. I mean, if I just delete everything, I'm going to delete everything, right? You have a mental note of all of this. Just have a clean chart. What do you see is happening here over and over? You also have to think of bears. You know, you got to look at the market from their angle. They've been successfully selling every touch of the EMA. This is no different, except we have 4 consecutive bull bars. So if the bulls are going to come in, they might come in at the 50%, and finally we could just go. But bears are also, listen, we've been in, control at the highs. This is where we defend our, defend the market because we have been selling the EMA. Look at the 2 bar reversals. Good sell. This ended up being a sell. This is now a first entry. Pull back, they're trying to get the second entry. But you're selling against 4 bull bars. Is this a bear flag? Some might argue that this is a bear flag, okay? But, and it's kind of triggered already. But selling against these guys, if they do take out this low, then yes. Then we're coming down here again and the bears are still in the market. So this is a way too much. You got now 2 bars. Will this be a small pullback bull trend or it's not ready yet? Well, if the bears take out the low or bar 26, then this is no longer a small pullback bull trend. So now you have two bear bars and there's a bear gap, okay? Can this still become a small pullback bull trend? Yes, I didn't buy it, okay? I have only bar 30 above the EMA, okay? It's not still always in long. It's struggling to become always in long, but I want to buy. It's just hasn't set up yet. Bears are still selling the EMA, so good for them. Now, I want to sell if they actually take out the 26 low, but still buyers might be waiting here yet again. That area I called a lot earlier, still attracting, and that's where the swing longs might be still sitting there. Okay, somewhere here, I'm going to look for some kind of a double bottom and go. Now, I didn't buy it because I wanted to see how this pullback is going to end. And that was a good choice. Now, if you are wanting to buy this and you still think that this is a small pullback bull trend and you put a buy stop order and it never got activated, you're safe. So now you understand why Al tells you if you're a new trader, always should use the stop orders, not the limit orders. If you bought with a limit order down here, you already made money, but where is the bull bar closing? It never closed. So you should have scalped, pay yourself. If there was a breakout, then your runner would be making money, and you can take that stop and put it right where the break even. Then that's fine. Or put it under the higher low, and you're still going swinging this. But that didn't happen. So what it did, those who bought with a limit order, if they haven't scalped, they got kicked out because their break even was probably there. Or they just hit close because they got panicked with the bar 32 getting so close to their stops. So they lost all that money that they made right up here with the bar 32 pullback. Okay? But if you actually waited with a stop order and you saw nothing happen and you cancel that out, listen, you come to this world with nothing, you leave this world with nothing. So whatever the heck is happening in your life, you're still a winner. So the stop order entries are like that. You're a winner regardless. Okay? Remember that. So bears are still putting a stake in the ground and saying, we're not out of the market yet. We're still going to try to get back into that yellow area. And then I'm going to look to see if bears are not breaking below this area strong and I start to see good bull closes, then I'll know the swing longs might enter the market. Or this is going to be one heck of a bear breakout, and I'm going to take this entire area, measure this height, and project it to downside for a measured move target for bears. All right, I am done with my session. I'm going to go mute because I know Brad is going to come in shortly. Hold on, I got a message from him. Okay. Okay. Have a good day, guys. I'm going to be trading my other accounts. I traded some personal accounts, and I need to trade my other accounts now. So I'm going to be in and out in the price action Discord, price action Rose Discord, and then also here the BTC Discord. So I try to post simultaneously in both. But my posts are going to be mostly in the ES read-only analysis, ES analysis read-only. Okay. Have a good weekend.
Okay, so the market is currently testing back around the 26 close. We do have a triangle, probably always in short. Turn the stat mode off. But the issue you have is we're right around the 26 low and the market may form a bottom here. Give me just one more second. So the bears they're doing a good job here, and they've got 3 consecutive bear bars reversing this. The bears want a breakout below a double, the neckline of the double top here, or here, projecting down. So we're testing the 26 low. Let's see here. Will there be more sellers below the 26 low, or will buyers come in? After 4 consecutive bear bars, or really 3, assuming this 4th one closes on its low, probably sellers above and a second leg down. So we're at an important price level. The 6th close, I'm actually going to move this to the close. I think it's more important right now. We're at the 6th close and the 26 low. Those are 2 areas of support. So there's probably more buyers down here than sellers. Even though we have a lot of bear bars down, there's a lot of bull bars in here closing on their highs. And the reality is, I think there's going to be bulls buying down here. So what I think one possibility is the market may test back at the 30 close. Okay, so disappointing close for the bears. It's still a micro channel, 5 bar bear micro channel. 34 closed above its midpoint, so we might go a little bit lower. However, we're probably getting near the bottom of a trading range, so there might be more buyers down here than sellers. But the bears have done a good job of getting bear bars, but they need to do more down here. You know, I'm suspicious. There's a couple things. Why did if you look at 27, 28, 29, and 30, those are decent bull bars. Now, if this is going to be a double top and measure move down, we could certainly keep going down. But the bears need more here. They're at support. They need to break below these support levels. So far, this is good for the bears, but again, tail on 34, buying into 35 at support, and that is a problem for the bears. The bears want to keep the measuring gap. Let me clean up this chart. I'm going to move this back to the low. I'm going to get rid of this bar. So probably going below the 6 low and always in short, but bottom of a trading range. First reverse left will probably fail. I do think the bears will likely get disappointed down here though. So if you're selling down here, one needs to be quick to make decisions, but always in short, probably going down for a second leg. But again, at support, 6 low. Some bulls buying the 6 low, bears taking profits back to the 6 low. Again, I think it's always in short, but my problem is this is the 5th consecutive bear bar at the bottom of the trading range. While it might be too early, it is too early to buy. Bulls probably need a micro double bottom. I think we're going to have to test the 26 low at some point. Bulls bought the 26 low during 34, probably scaled in lower here, and they're probably going to make money here. So I think the market is going to pull back, but tight bear channel increases the risk that the bears get a breakout here below bar 6 and probably a second leg down. The bears, they want to test 38.45, which would be a measured move from the 30 high to the 26 low. So why am I not more bearish with this many bear bars? The problem, and the reason I'm not more bearish is that it's a trading range day. Trading ranges are always trying to get traders to buy, trading ranges are always trying to get sellers to sell at the bottom of the trading range. And typically, it's right where it makes more sense to take profits. Now, the 60-minute chart just closed. Bear bar probably going to have to fall below the 60-minute chart, which means we probably have to go one tick below bar 36. So we could easily pull back first and then have to sell off and trigger the 36 low, which is the close of the 60-minute chart. Some bears, so if your selling closes, maybe you get out 4 points above 36. But again, I think it is, if we get a double bottom here, we could easily get back into this range. So I think the lower probability event would be a bear breakout and a large sell-off. You know, just look at the 60-minute chart. We have not touched the moving average. I don't know why it keeps doing this. We haven't touched the moving average in a whole lot of bars. So what is this? It's at least 20 bars. Do you think we're going to get further from the moving average? Right now, the moving average is 39.38. So, you know, what is that? 70 points away. I just think we're probably going to have to pull back overall. So here we go. The bulls, second leg trap. They see this sell off as a second leg trap. Now, probably going to have to go sideways here. And even if we get up to here, I don't think the first reversal is going to go straight up. But we still have an entire day left or half the day left. We could easily get back up to here before the end of the day. You know, when you get a lot of buying pressure, 7, 8, 9, 27, 28, 29, and 30, it lowers the probability of a bear trend. Bear trends do not have a lot of buying pressure on the open. So let me see if I can pull up an example here. That was kind of an exceptional day with all that buying pressure here. I'll come back and find one in a second. So sellers above 36, probably at least second leg down, probably will have to trigger 36 low. Now we haven't had a bull bar since bar 30. So this will be the seventh. If this is the bear bar, this will be the seventh bear bar, which is strong selling pressure. Some traders who bought the low, scaled and lower, trying to get out around break even here. Weekly chart. Since today's Friday, the weekly chart's important. So far, very strong week for the bears. The bears want to close this week on its low. The bulls, they want to get the market up to last week's low, but last week's low is pretty far away. I think it's about 50 points. Let me see here. Give me 1 second. So here is the low of last week. Probably won't get there, but it's possible. I would not rule it out. On Fridays, you can often get very surprisingly big breakouts. But for us to get up to here, the market probably have to go sideways. We'd have to develop more buying pressure. There need to be a trend line break or retest, and then, you know, something like this, breaking above the moving average. So right now, I don't think we're going to get up there. What I think is going to happen is sideways. So get up to 38.65 and probably go sideways. I do think the bulls are going to make money. Whoops. I do think the bulls are going to make money who bought the 26 low and more lower. I'm going to get rid of. So 1 moment. So we're testing the 26 low. For the bulls, they see this triangle as the final flag. We've been selling off sideways for a while, bear breakout. So the bulls see this is a failed bear breakout and a retest. This is why I was saying it's always in short, but it's not the greatest area to buy. Look at this 15-minute chart. This is of the Globex. Double bottom, so two-legged pullback, possible second leg trap. This might be strong enough for a second leg down, but again, you know, one of the issues is you have to measure risk, reward, and probability on everything you're doing. And let me blow this up here because this is a good example. So at some point, if you sell below 31, it actually makes a lot of sense. It's a double top. It's a double top with 22 and 30. You have a low probability, let's say 40-ish%, somewhere between 40 and 50, where if you sell, put your stop above, you're going to get twice your risk. Now, if you look at this, your risk was to the high of 32, and you certainly got more than twice your actual risk. So that was a good trade. However, at some point, by the 33 close, 34 close, your stop is all the way up above 30. Well, there's no difference between still being short from the 31 low and selling the close at 34. So if you sold this close, stop up here, it's no different than selling below here, stop up here. It's the same trade. And if you want to know why, look up it's the other people's money that Al talks about in the video course. And the issue is, just like right here, bears are not willing to risk all the way up to here because the risk reward's bad. And you have to have high probability. So if you're selling down here and your stop's up here, the only reason you would do that is if your probability was high of making a profit. And it's not that way at the bottom of a trading range. Excuse me, at the bottom of a trading range. So bulls are buying aggressively. Bears are giving up on the idea that we're testing below here. Give me just 1 second here. So what do we got? Well, I think there's a few things. I think we're going to get to the midpoint somewhere in here. Bulls bought up here, never had a chance to get out, so they usually are allowed to get out some way, so maybe we get up to here. Right now we have a good bar for the bulls, and it's a micro channel since 36. Let's see what this bar 36 through 39 is a micro channel. Let's see what 40 looks like. Well, 40, for one, will this gap stay open? So will price stay above the 38 high? Will this bar, which is 40, will 40 close as a bull bar? If it does, that increases the chances that we're going higher. I still think we're getting up to 78, 75. And the reason is this is a trading range. We had a lot of buying pressure here, a lot of buying pressure here. And in fact, give me just a second, I'm going to pull up a chart that I think is pretty interesting in the encyclopedia. Give me just 1 second. In the encyclopedia. Give me just 1 second. So the screen's loading. Give me just one more second. Well, I cannot find it, which of course, the one time I'm talking to everybody, I can't think of where it is. The point is, when you get a strong breakout on the open here and you get a lot of buying pressure, it significantly reduces the chances that even if we fall below the breakout, that it's going to be successful. So in other words, it increases the chances of a trading range. Bulls, they buy up here, they scale in lower because they know the market's going to be a trading range. For the bears, some are taking profits or selling at the moving average, but again, I don't want to be selling here after all this buying pressure. If anything, I'd be long, stop below 38, stop below 36. But probably better to wait and see what the follow through looks like. 38 high and the 40 low. It's a measuring gap, so good for the bears, good for the bulls. At a minimum, probably getting up to the 3870 area, the apex of today, this triangle. Open of the day, not much further above, probably we'll have to get there as well. Try to keep these the same with L. So let's see how this bar closes. 30 seconds left in the bar. You know, I know it's really easy to, Al always talks about this. He says how easy it is to just think how unfair this is. You get a big sell-off and, you know, it's so easy. You buy this close and you get stopped out here and then you go short down here and you hold thinking it's a pullback, and then the market's always in short. Now you're faced with this. So the beginner, they buy here, they get stopped out here, they short here, and they're going to probably get stopped out somewhere up here. And they just get eaten alive, buying too high in the top of the range, selling too low. And, you know, it's really challenging. The important piece is to remember most of the time you can enter on a pullback. And because of that, there's really, let me say that in a different way. There's really no risk of missing a move if you really think about it. The reason people have a fear of missing moves is they cannot tolerate the risk. So in other words, they're afraid of missing a strong breakout because they don't want to risk 10 points or 15 points. So they try to enter early to minimize risk, or they'll trade a smaller time frame. And what that causes is professional traders, they understand that if they wait, they can enter on a pullback, or they can wait for there to be an actual breakout. So, and I'm not using this point as an example, I'm just more or less talking about it. You know, a good example is 35, 36. Sure, you could sell down here, but the reality is, if this is going to be a strong breakout and we're going to get a measured move of this range, it's going to be pretty clear somewhere down here in the 38.50, 38.45 area that the market's going lower. So there's really no risk in waiting. You either sell the successful breakout down here, or you wait and sell the pullback. And this pullback's too strong, therefore you don't sell. And that's really important to realize that. So for the bulls, some bulls bought the 30 low, scaled in lower, probably looking to, some might be looking to take profits back at their entry. Others may say, gee, this is pretty strong here, this is strong here, good bull bar here, buying pressure here. I don't know, maybe we break to the upside of the open of the day, maybe we get all the way up here. But right now we're at the moving average and the market's trying to break above it. So let's see. Well, we probably will get to the open of the day. The question is, do we pull back first? So let's see how this bar looks. Some traders bought the 32 low, scaled in lower, and you can see we're stalling back to 32 low, back to 31 low. And I really would not be shocked at all if we get back to the low of the week. It seems far away, it's all the way up here, and it seems crazy, but today is Friday, and the bulls are going to try their best to disappoint this bar. So I don't think we're going to close on the low. I do not think at this moment we're going to get to the low of last week, but I would not be surprised. Maybe we get somewhere in the middle. So here's the range. Maybe we closed, around the 38.80 area. Daily chart. We are gapping below, testing the July 18th low. Probably, obviously the bulls want to close above the open of today and disappoint the bears. So about 10 seconds left in the bar. Looks like it's going to close as the bear bar. So disappointment. Some traders might be more interested in buying a 50% pullback from the low of 36 to the high of 41, which takes you back to the 26 low. And type of bear channel, first low may fail, so the market may have to retest lower and form a more credible bottom, maybe a higher low major trend reversal. But probably buyer is below 41. And the bears still try and close the gap above 38, the 38 high. You know, I talk about it a lot, and it's more just kind of one of the reasons why I talk about it so much. Give me just 1 second. Is kind of personal experience and just what I heard from Al. But it really is important, you know, perhaps maybe the biggest, you know, if there's one word that's important with trading, it's patience. It really does pay to be patient. And, you know, if you think about it, I heard Al mention this a long time ago in the trading room, and he's mentioned it a time or two. But the one thing he said is if you're buying a breakout in a trading range and you feel eager to get in because you don't think the breakout's going to go that far. So let's say you're buying, you know, you're buying somewhere down here on bar 8 because you think it's going to go to here, but you don't think it's going to go much further. If you think about it, it's really illogical is what he said, because if you're buying a breakout in a trading range and you're trying to get in as early as possible because you don't think it's going to go far, you're basically buying what you think is going to be a failed breakout. Because if you were truly willing to buy a breakout and you truly thought it was going to go really far, you would be happy to buy anywhere. And, you know, it was just really, that was really eye-opening, because what he was saying is just be patient. You know, it's kind of like this 43. Sure, 43 might be that one time where you get a big bar 43 and it races up to the high of the day. But it's probably not going to be. You know, just look at all these breakouts over here. Bar 3 and 4 is, you know, as strong as they were, they led to a small second leg sideways reverse. 11, 12, strong second leg down, yes. But even here, quickly led to disappointment. So a lot of breakouts just don't go that far. And they usually reverse back to the breakout point. So the 12 close, sold off quite a bit, but we came really close to the 12 close here, went down lower, and we broke back above it. So the whole point of me saying that is do not be in denial when you see all this. You know, it's so easy to sell the close down here and just hold on for dear life. And, you know, also if you're long up here, some traders sold down here. Some bears may sell below here and get out, break even over here. So we could easily sell off back down to here. We could also form a lower high and get a new low. You know, it is possible. You know, again, I said it's Friday. We could get a surprise move. We could get a surprise sell-off into the day. I don't think we're going to get it because of all the buying pressure and because of the 60-minute chart over here. I don't know if it's my scaling or what the deal is, but these small boxes always seem to get kind of screwed up. So the bulls are trying to form a small pullback trend. They have one gap, the high of 38, low of 40, so that's good. Let's see if they can form more other gaps. I do think we're going to get to the open of the day. So why do I think we're going to get to the open of the day? Well, it's a trading range. Trading ranges usually get back to the open of the day. Also, when you have a range and when the open's in the middle of the range, that means it's probably a trading range day. And if the midpoint is usually a magnet, which means the open's a magnet. So disappointing for the bears. Probably going to get a 50% pullback from the 36 low to the 43 high. So bears want to break out pullback short, and they want to test at the 36 low. probably going to form a higher low here. So I think the sell-off is probably going to be minor. Well, but it could certainly get back down here. Testing into the gap, so closing the gap, which is expected on a trading range day. The bulls, let's see what they want. They want a breakout of this flag, so bear sell-off, pull back, so this is the bear flag up to the 30.42 high. They want a bull breakout of this flag and a measured move up. Takes us up to the 85 area. We're testing into the midpoint of these two bars, trying to close the gap, 38 high. Probably buyers somewhere down here. It's reasonable for bulls to exit below 43 and look to buy lower, but the bulls that do exit below 43 run the risk of getting trapped here if the market goes outside up or you get a high one buy. Trading ranges are always trying to trap traders. They're trying to get traders to sell out of longs and then force to buy higher. They always try, when the market's selling off, it always tries to get traders to buy back shorts and then have to sell more lower. But so far, not ideal for the bulls. You know, they really should have kept the gap open at the 38 high. 30 seconds left in the bar. Let's see what the bears can do here. Can the bears get this bar to close on its low, or will this be a disappointing bar for the bears, and will the bears scalp out that sold below 43? Probably going to be disappointing for the bears. And just like this is what I was talking about. The bulls, some bulls get out of 43, but now they're forced with a difficult decision. Do they buy? Do they buy betting that 43 is going to fail and lead to an upside breakout? High one buy above 44, but bear bar. So not that easy. And because it's not that easy, that tells me this is confusion, and confusion is the hallmark of a trading range. The bears, they're disappointed. They wanted a strong entry bar 44. They didn't get it. The bulls are disappointed because they wanted a strong rally up to the open of the day, and they didn't get it. So hallmark, again, disappointment, confusion, both are hallmarks of a trading range. That makes me think we're probably going more sideways. Market's deciding, are we going to get to the open of the day or test down to the 36 low? Bulls breakout pullback buy. The bulls have a reasonable chance of getting a breakout above 43 and a measuring gap, but they need a decent signal bar here and a strong breakout. Otherwise, this could just be a sellback and test the open of the day, and it probably is. Some bulls buying here, though, betting on 50% pullback and a breakout and test up to here. So sellers above 44. The bulls are not doing enough here. You know, they've had chances, but they're not capitalizing on it. And that is disappointing. So it may have to go a little bit lower. The biggest takeaway here is the probability is fairly neutral. If one side had clear probability or high probability, we would not be going sideways like this. I still think the market may get a higher low here in second leg up. With all this buying pressure here, 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 and here, makes me think the market's going to try to go up. So what would the low probability event be? Low probability event would be strong breakout and a sell-off, trapping all the traders here that have been buying. Breakout pullback short below 45. 3 consecutive bear bars, 2 of them closing on their lows. Good for the bears. The bulls will try and prevent the bar from triggering. So some bulls buying aggressively, putting a stop a few ticks below 45. And that is computers. You know, that is not an ideal strategy, I think, for most people to trade. The probability is low. You're risking a few ticks to make several points. And that is a low probability, so you'll lose most of the time, and that is emotionally too difficult for most people to trade to take. Some bulls buying 50% pullback from the 36 low, 43 high. For the bulls, second entry buy, first entry above 44, second entry would be above 46. 46 is the second entry, so 47 would trigger it. Again, I still think we're going higher. 15-minute chart shows it pretty well. Two decent bull bars, bear bar, bulls buying 50%. Some bears sold this close, scaled in higher, getting out around break even. Same logic going on down here. Bears sold, scaled in higher, getting out at the midpoint. So the bulls want something like this. You know, leg one, leg two, takes it up into the day. They need a good buy signal bar here. It's already getting too big, which is why some traders bought, scale and scalped out. Other traders just buying at 50%. So let's see how this bar closes. 10 seconds left. Not a great bar for the bulls, but the bears, unless they get a downside breakout, they're probably going to fail and the market's going to go higher. But not a great buy signal bar for the bulls to buy above. Again, I still think we're going higher, but I'm not certain. I think the odds slightly favor the bulls, but not by much. Sometimes you can look at the SDS. It's an inverse of the E-mini, and it can kind of give you just a different perspective. So gap up and three-legged pullback to the moving average. Bulls bought. Test channeling above the moving average. Bulls want an upside breakout. Bears want a wedge. 1, 2, 3. Second leg down and test somewhere down here. Oops. Bears trying to get the breakout below 46. You see what just happened there? Look at the 45 low and ask yourself, and look at the low of the current bar and ask yourself what just happened. Some traders sold the 45 low, disappointed 46, tried to get out break even back at their entry, which was the 45 low, which is why the market sold off and bounced there. So it's common to have, kind of patterns within patterns. Excuse me. So what I mean is triangle here. Now we have a triangle right here. Let me just, that triangle is less important. So you can, for the bears, obviously, bears see a bear trend. They want the downside breakout. Other traders will argue we're in a triangle right here. And probability close to 50-50. Again, I think you have to be fairly neutral here. Well, I think the odds slightly favor the bulls. I'm not super confident. And the reason I think it slightly favors the bulls is I think we're going to get a rally today because of all the buying pressure. And we're getting in that window where we're at kind of the middle of the day, bar 44. We're a little passive. So we did rally on the open from bar 6 to bar 14, but we sold off for a little while. And I think at some point we're going to try and rally maybe back up to here. But, this is strong enough to where we may have to retest these lows. you can't have a strong opinion here. I think that's a mistake. This is going to be the fourth overlapping bar. So on a 1 minute chart, this is what it looks like. Better to just wait for the breakout, wait for a downside breakout and an upside breakout. And, you can be long betting on a swing. You can be short, but again, I think if I had to be long or short, I'd be long because we've been selling off for a while. And I think it's reasonable if the market gets back to the open of the day. Okay, bulls trying for the upside breakout in the second leg, leg one, pullback leg two. Let's see what they can get here. Will bulls that bought, will they scalp? Will this bar close on its high? Can this bar close above 43? And pay attention. Let's see on bar 49 right now. Let's see if this bar pulls back, 50%, which it already kind of is. So hesitation by the bulls. It's better if a bar does not pull back intra-bar. So if we look at a 1 minute chart, we can see formation of this bar. And it's better if during the bar there's not a lot of a pullback. Now that, again, I would not go looking at a 1 minute chart measuring that. You can infer it on the 5 minute chart. Just look at the bar as it's forming. But so far, looks like the bears are starting to give up and we're probably going higher. So that's good for the bulls. One thing that's important to do, again, if we've been in a trading range, and I think it's also important that one thinks about what would disappoint the bulls, and what would disappoint the bulls is what's going on right now. So more sellers above 43 than buyers. So bears selling below 49 are selling below a big bar that's a doji. Might be more buyers below 49 than sellers. Certainly a disappointing bar for the bulls though. So that's why I said there might be more buyers below 49 than sellers. That happens a lot in the trading range. And then, again, trading ranges are always trying to trap you out of trades. Where if you bought above 48, you're disappointed 49, you exit as 49 starts to go down, and then you watch 50, the current bar, rally all the way back to the highs. And it can be upsetting, and I totally get that. And part of that is just traders scalping, and we can think of a million reasons why. I sum it up as the market's always trying to trap you. It's trying to get you to do the wrong thing. It's trying to get you to exit too early, or, it's trying, in this case, it trapped bulls out and trapped bears in. So, good bar for the bulls. Makes me think we're getting to the open of the day. But let's see how this closes. Starting to get closes above the moving average, more price above it. So again, I think we're going to get a couple legs up here. And my reasoning is all this buying pressure here, 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 and here. And the weekly chart. Again, I don't think this will happen, but I'm going to drag this over here just so we see it. It is possible we get to the low of the week. It sounds crazy, but the bulls want to prevent the market from closing below the low last week. It would be a sign of strength by the bulls and a great way for the bulls, at least to finish the week strong, or minimize the damage that the bears did here. That would also create a buy signal bar on the daily chart. 3 pushes down, 1, 2, 3. They'll break out of the double bottom here, tested these lows down here. So I wouldn't be surprised one bit if we rallied up to the high today. You know, again, you can get very violent moves on Fridays with the close of the week. So, you know, and really that could be any time. You cannot be in denial of what the market's doing. But if we're going to get up here, we're going to see strong bull bars. So there's no rush. We're not going to get just one big bull bar up to here. If we do, it's going to be consecutive bull bars, and there will be time to buy. Otherwise, better to just assume that we're going to fail somewhere up here and go sideways. Always think about what the most disappointing thing would be, because that's usually what will happen. And that means we're probably not going to get a very strong bull move, but we're also not going to get a strong bear move. So we'll see. I think we're going to get to the open of the day. You know, there you go, 50 tail on top. Could not close above the 49 high. Disappointment. So we're probably going to get to the open of the day, but let's see. It's also important to note the bulls have a micro channel. So they have a micro channel since 46, so that's 5 bars. That is a subtle sign of trending behavior. It's not, you know, it's not great because lots of tails, disappointing bars, but that is a sign of the bulls being strong and increases the chances that the market's going to break to the upside. And by break to the upside, right now, I just mean a test of the open of the day. We still may get to the measured move target low of last week for the bulls, but I think that is pretty far, but it's not too far. You know, all it takes is a couple of consecutive bull bars closing on their highs, and if everybody agrees we're going up there, we can get up there really quick. But until we see that we're not going up there. So disappointing for the bulls. Still 10 seconds left of the bar. For the bears, 2 legs, leg 1 to 43, pull back leg 2, double top of 42, and they want a bear breakout. Again, I'm still suspicious of the bears, but I'm certainly disappointed if I'm a bull. For the bears, 20 gap bars short, 51 low. So some bears will sell, betting that we test all the way down to here, and that this is the final flag. Other bulls will buy, betting on a micro channel since 46 and higher prices. Bulls trying to defend a gap, maybe the 48 high and down here, but probably will close. Good bar for the bears, but let's see how the follow through looks. 2 bear bars, so that's good, and 20 gap bar sell. May get down to the 36 low. But just as the bulls were disappointed on the way up past since bar 36, let's see if the bears are disappointed on the way down. The bulls want a double bottom with 44 and the higher low major trend reversal. But they would need a pretty good bull bar for 53. And even then, may still get a second leg down. So 3 consecutive bear bars, probably always in short. Bears want a measured move down from maybe the 50 high. They want a double top here, break below the neckline, measured move down. The bulls want a higher low. You can call it a higher low or a double bottom, major trend reversal. But after 3 consecutive bear bars closing on their lows, the first reversal up probably will fail. But let's see what happens at 36 low if we get there. We're also testing the low closes, 35, 36. Some bears might buy back shorts down here. Others will hold, betting on a second leg down. Bottom of a trading range though. 15-minute chart. Low 1, low 2. Bulls want a breakout, so they see this as a failed breakout of a low 2 and they want an upside move. Testing the lows down here. Couldn't quite get there. Again, don't be fooled by this. Lots of bull bars, lots of buying pressure. It's just really dangerous to be selling at what could be the bottom of the range. Even if we may go a little bit lower, it can only be a second leg down. So probably sellers above 53. But again, I'm not too eager to sell down here, especially on a day that looks like a trading range with a lot of trading range price action. And we've had a lot of selling over these past couple days. So, I personally, I do not think we're going to close on the low today. I think this is going to be a disappointing day for the bulls. And I think there's a chance, it's reasonable, that we close above the open. Okay, I will be back in about 15, 20 minutes. Should be back by 1:20. Again, we're getting a lot of buying pressure, so I think we're going to test up to the open of the day. And part of that is due to the Friday and the daily chart. I think the bulls are going to be I think the bears are going to be disappointed with today, but the bulls, they need to get strong bull bars here. Otherwise, we could get the bear breakout. It's still pretty neutral. So I will be back in just a few. Okay, I'm back. So the bulls looks like they are giving up. The bears looks like they're giving up, testing the open of the day. They got a double bottom, higher low. Give me just 1 second. I just got to move a couple of things around. Okay. Strong enough breakout, probably going a little bit higher, probably to the high of the day. But let's see. Let's see how this bar closes. I've got to fix one thing on my computer, so I'll be right back. Probably going a little bit higher. I'm still having computer issues on my other computer, so I'm having to mute this for a moment. But I'll be back as soon as I can. Shouldn't be just a few more minutes. Okay, I'm back. Sorry about that. So 60, good bar for the bulls. 61, probably going a little bit higher. One of the issues, I'm in a trade right now, and one of the things you have to learn is things are going to break, things are going to mess up. I've got a 49-inch, widescreen, and I've got like 66% of the screen is personal stuff, my trading and other things, and then 33% of the screen is the GoToMeeting, the webinar, and for sometimes half the screen will stop working. And you've got to really have a way. And I couldn't see what the price was at in my own trade. And you've got to figure out a way to have a contingency. So if your internet goes out, if your computer stops working, you know, whether that's having, you know, an app on your phone that you can manage the trade, you always want to figure out a way, because things will happen where you can't see the screen. And that will happen at some point. So high one buy, bears selling, but strong enough breakout, 60 and 61, probably going a little bit higher. So again, the bulls need to do more. We're trying to test this breakout point here. We could easily get up here. I would not be surprised one bit. Just look at the weekly chart for a minute. Whoops, 1 second. This is the, there we go. We're trying to get back to the low of last week, and we could easily do it, but we need to do more here. By the way, you've heard Al talk about how trading programs can stop working at times. I remember there was a time where I was trading on a Forex platform, and I was in a trade, and all of a sudden the data stopped working for the platform. And I won't mention the name of the platform, but it was a popular platform. And I couldn't log on online. I couldn't log in on the app. It just kept saying, you know, server not available. And if you call, and I tried to call them, and their phone lines were busy because everybody was trying to call them. So the point is with that story, and that was for about 15 or 20 minutes. And luckily, you know, my orders were still in. I don't remember exactly what happened in the trade, but the point is things can mess up, so you have to be prepared for that. And if it did, you know, the platform could stop working and you wouldn't have a way to manage the trade. So that can happen. So 62. So far we have a micro channel, 58, 59, 16, 61. Bear bar, 62. Certainly it is disappointing for the bulls. Failed breakout of the 30 high. But again, you know, probably going a little bit higher. But let's see what this follow through looks like. This is certainly, you know, we're testing these breakout points here, but this is not, you know, the bulls need to do something here. So profit taking back at the open of the day, which is expected. Yeah, Ethan, I agree. Some traders did sell up here. They sold as this bar was going higher, and we're trying to test back this area. So those bears that sold here and scaled in are deciding what to do here. Some will get out of break even. Others may try and hold. Some bulls want to buy a 50% pullback. But again, this is strong enough up that I'm not interested in selling right now. You can see how far away we are from the 60-minute moving average, this blue line. And, you know, again, I mentioned it earlier today, but part of my problem with the sell-off today was just how extended we are from the moving average. And at some point, we're going to have to get closer to the moving average, whether that's going sideways or up, which makes me think, you know, it's certainly possible we rally 30 points and get to this area, 3,900, basically the low last week. And it's 85. Well, 3,903, so pretty much 3,900. So I don't know. There's still an hour and some change left in the day, but, you know, disappointing 62. So the bulls, they need to do more here. They need to keep this gap open. You know, disappointing 62. So the bulls, they need to do more here. They need to keep this gap open. The bears, they hope this is the second leg trap, but strong enough breakout. I think this is enough of a surprise that we'll probably get a second leg up. It's possible 62 is the second leg, though. So let's see what happens. Yeah, I love money, and I'm just responding because it's easier than typing. Yeah, that's 659 and 61 is still a gap. So some bulls deciding whether or not to get out break even here. Still probably strong enough for a second leg, but stops far away. But I wouldn't be surprised if we started going sideways around the open of the day. That is definitely a target. Just look at the daily chart right here. Again, I mentioned earlier, the bulls would try hard to prevent today from being a bear day, because that would disappoint traders. So we're getting in the final hour, and let's see what happens. Again, this is all about the weekly chart right now. The weekly chart closes in about an hour. It's real similar to kind of like the final 30 seconds of a 5-minute bar, and how it can change drastically. The same thing can happen on the final day of the weekly chart, whether that's the final day, the last half day of the end of the week. A lot can change. And even though something seems far away, when everybody agrees that the market's going in that direction, it can just vacuum up really quickly. So right now, traders are deciding. High one buy, but bear bar, so disappointing. Some traders they bought the 60 close, disappointed 61, 62. They're deciding if they should get out break even right here. Still probably going a little bit higher, but again, 60, good bar, but tail on top. 61, inside bar. So it's follow through, but not the greatest follow through in the world. 62 and 63 are disappointing. So let's see what happens here. So the bulls are trying hard to get to the low of last week and the high of today. So you can see traders immediately sold into the close. Tail on top, still probably going a little bit higher. Some bears sold in here, scaled in higher, trying to get out break even. The bears want a second entry short here, and they want to prevent the market from getting to the high of the day, and we'll try hard to do that, but strong enough, probably going a little bit higher. Again, I think it's reasonable the market gets up to here, but if we close on its low right here, a good amount of traders may exit. So the bulls definitely will try and prevent the market from getting a bear bar closing on its low. Some bulls buying a 50% pullback, buying a 50% pullback of 64, buying back at the 63 high. Bears sold the 63 high, scaled and higher, trying to get out break even here. I still think it's reasonable. We'll test up to the high of the day. And, again, I think this is about the end of the week, end of the day on the daily chart. And I know it seems crazy, but this is not that far away, but it's climactic. So if we're going to get up there, the bulls need to convince traders to stay in the market. And the way they convince traders to stay in the market is they start getting bull bars closing on their highs, gaps. They've got a gap here, this red line. They need a gap here. They need to get this bar to close above the 64 high. If they make it confusing, then more and more traders will consider getting out. So testing the high close of the day, the 13 close right here, and finding some resistance. The market's deciding on the close of this bar. We have 60 seconds left. Will this bar close above 64? And if not, will it close just a few ticks below the 64 high, which would be good for the bulls? Let's see. Strong close for the bulls. That's good. Closed above the 64 high. I think we're going to the high today. And, probably it's too early to sell. So if anything, you're long, stop below 64, 63, or you're flat and waiting for more information. So can you sell up here and scale in higher? You might can, but the challenge with the issue with that is stop placement. And with it getting an hour left or leading to the close, again, it doesn't happen frequently, but it happens often enough. You can get a surprisingly strong breakout late in the day. And if you do get a breakout late in the day and you hold short, it becomes difficult to manage the position because you could rack up if you're selling in here and the market rallies up to here, what do? Do you exit? Do you take if you're selling, you have to be quick. And it's reasonable to sell. Bears sold here, they sold up here, scalping out, bears sold up here, and they're probably buying back down here. So, but it becomes challenging. You have to be quick to manage the trade. The bears want to form a possible wedge top. Maybe here, here, and here, or 50 here and here. 60 might be strong enough, though, that the bears need another push up. The bulls do. So we'll see. Bears haven't made money since arguably selling on a stop entry since 54. So that lowers the probability of selling on a stop entry below here. You can see bulls trying to defend this gap. Bears sold this high, scaled in. So I'm just being quick to exit. If in general, if you're selling with limit orders or trading with limit orders, and you sell the close and the market goes down and it comes close to your target, a lot of traders will set their stop at break even because often enough it'll sell off, get close to your target, and then go up and then break out. Try to find an example. So it's kind of like over here. If you buy the 3 close and price goes up and it almost hits your target but doesn't and starts to turn down, in general it's better to just exit and look for another trade. So what do the bulls do if this bar closes on its low? Well, it's a wedge, and it's reasonable to exit longs below the bar. And if you do, you look to buy again. Tail closed above the midpoint, probably buyers below, but disappointing for the bulls for sure. Some bulls may look to exit at the 65 high. They buy the 65 close, scan on lower, look to outbreak even. Other bulls may hold, betting on an upside breakout and a measuring gap right here. Right at this red line. So for the bulls, breakout, pullback, buy. While it might be a wedge, I'm skeptical. As a bear, I'm skeptical because of the gaps. Possible measuring gap here, measuring gap here. Those gaps trap traders. They trap bears who are scaling in. And traders pay attention to them because they're important, because if gaps stay open, it increases the chances that the market will rally and go higher. So new high above 66, some bears selling and some bulls selling out of longs. It's becoming difficult for the bulls to hold long, so increase the probability of a pullback. So again, the market's deciding on a test of the open of the day or the high of the day. And it's getting late in the day. So I still think I'll slightly favor a test of the high of the day, but hard to stay long. And this is part of the reason what traps traders is I was long, I got flat. And part of the problem is, and now I'm trapped out of the trade. When you're long and then you get a breakout and then you get hesitation here, your one concern is there might be sellers up here and there might be sellers taking profits, and then you see the market rally. And on a 1-minute chart, if you notice, see this tail right here. Well, this bar rallied and then it sold off back to the low. And I didn't want the market to go outside down. And that caused me to exit, which was, in hindsight, now that was a mistake, because I'm probably going to have a hard time getting back in. And again, this is what happens. It traps traders. It traps bulls out of the trade or forces them to sell out of longs early. It traps bears into losing trades and grinds the market up. And it looks like a leg in a trading range. You know, this is why small pullback trends happen. Now, this is fairly climactic, and it's a wedge top, 3 pushes up. 1, 2, 3, trying to break out to the upside. You know, but again, breakout, bad follow through. Breakout on 64, 65, 66, bad follow through. But so far, this is good for the bulls. And this is what I was saying about late in the day. You know, it seems shocking, but you really can get a strong move in the second portion of the day. And, you know, let's look at the daily chart. Actually, look at the weekly chart first. You know, that doesn't look so far away anymore. You know, it's only 10 points away, basically. Daily chart, what happened to our strong bear day? Well, now it's bull day. So I know it seems crazy that stuff can happen, but when everybody agrees that the market's going to somewhere, you know, that the market's failing and the market's going to go higher, it happens. 60-minute chart. 3 consecutive bull bars getting closer to the moving average. So again, I think we have to go higher and get closer to the moving average. For the bulls, or the 5-minute, consecutive buy climaxes here, here, here. So again, it becomes harder to stay long here. It is a buy the close bar, but I really don't like to buy the third push up. So again, I'm trapped out. You know, in hindsight, I should have stayed in, but I didn't. And 67, so it's buy the close, but what do you do at 68? The current bar closes on its low. Well, you probably have to exit. It's a micro channel since 63, so 5-bar micro channel. And this was what I was talking about holding short. How do you manage this trade? If you sold the high of 63 and scaled in higher and you didn't get out during 65, where you sold up here and you didn't get out on the pullback, it becomes very difficult. And, you know, just like down here, if you bought up here and scaled in lower, traders got out break even. Well, the same thing will probably happen here. The bears that sold, they sold here, they sold here, they sold them higher. They might be able to get out break even, but the danger is we have the risk of racing up to the low of last week. And if that happens, they're going to get squeezed out of the trade. So the market is, you know, it's very dangerous to hold short in these kind of situations, and you can just get crushed because you can become paralyzed. So let's see, you know, this is strong enough bull bar. It's probably going a little bit higher in the second leg, probably going to get to the low of last week. But again, you know, hard to buy up here, and it's quite parabolic, you know, here, here, and here. So I don't know, I'm trapped out. But so far, you know, it's always fascinating how the day can just completely reverse itself. You know, how about that for a stop entry buy on the daily chart? Looks really good. But 20 minutes ago or an hour ago, looked terrible. So let's see how this bar closes. Will it close the bull bar closing on its high? Will the market pull back after it reached the high of the day? We'll see. You know, probably will have it, you know, if I'm a bull, I'm hoping that the day is going to close on its high. And since I think the daily chart's in a trading range, I'm thinking that the day is going to be disappointing. So what could be disappointing? Well, what if we close somewhere down here, painting a big tail on the daily chart? That would certainly be disappointing. So, you know, again, even though we're rallying, I wouldn't be shocked at all if the market gets back to the open of the day. You know, this is climactic. and it's unsustainable. Let's look at do it like this. So here's a 2-minute chart. Buy climax, buy climax, buy climax. 3-minute or maybe a 1-minute chart. Spike pullback channel. You don't need to see that. It's just more of, but it's helpful to understand it. Now, just because it's parabolic and the market's probably going to pull back here, it's pretty dangerous to sell. You're trying to break above the trading range, and again, you have an obvious magnet at the low of last week, and the market might try and get there. Some traders will see 67 as exhaustion, and they sold the close at 67, scaling in higher, trying to get out at the 67 close. So 68 weak close for the bulls. Still probably going a little bit higher, but again, that's a sign that there might be more sellers up here than buyers. Probably will have to get to the 67 close. Again, some bears sold 67 scaling in, and you can see they just made money. Now, let's see 66. Can the bears get to the 66 high? A further sign of strength for the bears that the bears are making money, selling new highs. This is not what you want to see as a bull. When you break above obvious resistance, high of the day, you don't want to see the market go a couple points above and then sell off like this. That is a sign of profit taking and aggressive selling. So a lot of times, this doesn't necessarily mean that the bears are that they're losing or that they're not in control. What I mean by that is if everybody agrees that the market's going to the open of the day, bears just step aside. And then they agree that maybe we're going to the high of the day. So what do? They just step aside. And as soon as we get to the high of the day, the bears can come in out of nowhere and just start aggressively selling. And the bulls, they start taking profits, and therefore we just melt away and we sell off. So, this is good for the bears. Increases the probability that we're not going to get to the low of last week. We're going much higher. But micro channel, since bar 63, so probably the first reversal down will fail, and probably sideways here more than down. I want to mention one thing. FedEx. I can get it pulled up. Al talks about this here and there on the video course, but this is one of the dangers of using a protected stop or being long on margin on a stop. So, let's say hypothetically, let's say you bought down here and you're betting on a trading range. So you buy and, maybe you'll have a stop down here, 190, or maybe somewhere down here. And then look what happened. You got your stop would have been filled. I don't know why that says 204, but your stop would have been filled at 150. So you thought you would lose at worst 190, but when the market opened on today, you lost actually basically $30 more per share, and that could be really devastating. So that's why a lot of people trade options on the daily chart, because you can get these gap down, and even with the day rallying, this is FedEx, the market's still down 21%. So again, just something to think about. That's not as big of a problem with Forex or the E-mini because you have overnight trading. So you would just get stopped out, but that's a greater risk for stocks. Al talks about that in the video course. I think there's an option section or something like that. So some bulls buying, bears taking profits. Bulls bought the 68 low, scaled in lower, and probably will be able to make money. Some just getting out break even, maybe disappointed on the sell off on 69. For the bulls, if most bulls, I don't know, I'd be flat over here. And this is why I was in part trapped out. I don't want to be, if I exit over here, I don't want to just re-enter necessarily just because the market went higher, because it's climactic here, here, and here. And I don't want to be entering on more, if the market's already climactic, if I exit a trade here in this area as this bar went up and then turned down intra-bar, if I exit then, I certainly, and I exit because I think the market's climactic, I certainly don't want to enter as the market's becoming more climactic. So that's why I said I was trapped out. So probably going to get to the open of the day here. This is enough damage that the first look probably will fail. Do I think we're going to race all the way down to here? No. But open of the day, I had bar 50. Certainly two reasonable targets for the bears. May have to pull back though first. So what do I mean by pullback? Well, maybe a 50% retracement of 68 in the low here. So the market's deciding, will the current bar be follow through for the bears, or will this be disappointing for the bears? We don't know yet. Some computers would sell 20 points above the open. That's an answer to the trading room chat question somebody asked. They will sell in increments. Computers do it all the time, increments of 5, increments of 10. Some will definitely do it. And, they may just sell 5 points above, so sell 5, 5, 5, and 5, maybe. I think that's hard to do, though, as a person. And the reason is the risk can get really big. And, and that's why I talk a lot about trading something like the SPY. It's really difficult to do that with something like the micros. Again, I know y'all heard me talk about this. I'm a big proponent of trading the SPY if you can, because especially now where for most there's really they claim it's no commission. I know that the broker gets paid, the spread. They have their other ways of making money, but it's not, you can trade one share and it wouldn't cost you anything really where you wouldn't be able to take the trade. So the advantage is you can trade as large or as small as you want, and you can scale in, you can scale out, and it's just a really great way to trade. And the problem with the micros for most people is, again, most people cannot trade 5 or 6 or 7 or 8 micros. And I think that's important because it allows you to have several position sizes, which is another reason why the SPY is really great. You can trade more like an institution would trade, and I think that's really important to figure out. Institutions are scaling in, and that's just reality. So, anyways, more on that later. Probably going to get down to the open of the day and test it. Some traders sold the open, maybe sold more higher, and this is around break even. For the bulls, it's a double bottom with 66. So we'll see what happens here. 3-bar micro channel, probably sellers above. There were plenty of bulls who bought the 68 low and more lower, and they're trying to get out back to 68 low, and they'll probably get that opportunity. Yeah, Lee D, you're right. That is perfect symmetry. And that can happen where what Lee D is saying in the chat is you get things like this where the market will go basically a measured move up from the low to the open, projecting up. And what it does is it puts the open of the day in the middle of the day's range. Yeah, Lee D, sorry, I don't know if I was on mute. Lee D's right. They mentioned that there's perfect symmetry. The low of the day to the open, projecting up, takes you right to here. And that puts the open of the day exactly in the middle. So a lot of traders that sold scalped out. They sold the 69 close, they sold a 50% pullback, they sold during 70. And the problem here is a lot of those bears scalped out. They sold more higher, or they just sold more higher. And when the market went down, they started exiting. Still may get a second leg down, test the open of the day, but testing the 68 low. Market trying to get up to the low last week. Might be more sellers up here. Some bears sold the 70 high and more higher, and the market's getting back to the 75 high. Okay. Traders bought 68 close. They bought the 68 low, scaled in lower on 69.70. What did 71 just allow them to do? It allowed them out. So, again, probably 70, huge bar. It's bad for stop entries. This is more limit order trading, and it's getting later in the day, so it's getting more dangerous for limit orders. You're in the middle of a tight trading range since 66 through now. So, not ideal to buy, not ideal to sell here. The sell was on the way up. The buy was on the way down. So really better to do nothing right here. Probably buyers below 71. Tight trading range. So probably going to stay sideways around here. May try and get back to the open of the day, but still probably sideways. So for the bulls, 2 legs down, 70, 72. The bulls want a failed breakout below a double bottom here, vacuuming down at the open of the day. So probably going sideways around here. What are the chances we break far below? Not much. Probably mostly sideways over here. You know, again, while we might get to the high of the day, I don't know. I think the market's going to go sideways in this tight range in 66 and probably disappoint both the bulls and the bears. I don't think we're going to close on the high, but, you know, we might, but I don't think we will. We'll see. You know, this really is a lot of damage done over here, but it's possible. One of the problems with bar 73 is the size of the bar. The risk is big, makes traders less willing to take the trade, and increases the probability there might be sellers, but it's basically a second entry buy, so, you know, not ideal of the bar to sell against. But if this does close on its high, some traders may take the chance to buy above it, betting on the low last week. Getting within the range, you know, it's around 12:30 Pacific time, 2:30 Central. You know, getting in that final 30 minutes of the stock market, final 45 minutes of the E-mini. And if you're not going to get a stop entry here, you know, it's probably going to go more sideways here. If it's really going sideways up to 12:30 or 2:30 Central, probably not much more left in the day. By the way, what happened here? So bulls bought, scaled in, and they exited because the bar was too big. You know, this selling up here was mostly by profit taking, not stop entry buyers. And Al talked about that, and I kind of agree with him. One thing he mentioned was a lot of it, he thinks institutional algorithms will force bars to be too big so swing traders won't take them. So, you know, if you're a bear and you want to prevent the market from going higher, perhaps one thing you could do, and I don't know if this is true, but it just makes sense. One thing you could do is buy aggressively into the bar and make the bar get too big, kind of like this bar here, and then sell it, which would cause this bar, it would cause more traders to be less interested in selling, than buying the close of the bar or above it when it's high. So, interesting little thought. Yeah, Dean, give me 1 second. I'll repeat it. I'm managing a position real quick. Yeah, so what I was saying on 73 sold off and rallied, and traders bought during 73 as it was going down. I don't pay attention to RSI, and I really keep my chart. My chart actually that I'm looking at, I have 2 screens up. One's my personal computer, the other's the room. This has more information actually on it than my other screen. And my other screen's there's like only 3 lines right now, but I'm also looking at the chart up here, and it doesn't make sense to double draw everything. But back to bar 73, traders bought as 73 was selling off, and as it started to turn up, they took profits. And one thing Al mentioned that makes sense, and I agree with it, is a lot of times you'll get a bar that just starts to get too big. So imagine 73. During this tail, 73 was a bull bar as it's going up. And eventually, if the bull bar goes up too much, 73 becomes too big of a bar. Bulls do not want to buy it. And what that causes is traders to sell. So limit order bulls, they buy, and as the bar starts to get bigger, they might be hoping for a swing trade. But if it gets too big, they'll just scalp out of the trade because they don't want to risk that much on a stop entry. Bears know that. So one thing Al mentioned, he thinks that algorithms, they might buy the bar aggressively if they're bears, purposely making the bar too big so that everybody sells it. And it's kind of like this. You want a bad stop entry is a bar when the risk is too big, it's a bad stop entry. I can't get the words out of my mouth. So a good example is, kind of like this doji here. Nobody's going to sell this bar. They'll sell the close maybe, but they're not going to sell below it. So it's a wedge, 3 pushes, 1, 2, 3. And you can call it 66, 70, 73. But again, you're buying in the middle of the trading range. So yeah, if this bar closes on its high, it's a wedge. Traders can take it for a swing, betting that we get to the high of the day and the low of last week. Starting to get a little late. 2:38 Central Time. Again, personally, I don't know. I think you can take it for a swing, but this bar is getting too big. It's kind of like what I talked about on 73. So now the signal bar is 73. There might be more sellers above. Yeah. By the end of bar 75, probably better to stop trading. Yeah. And again, I'm expecting a tight trading range into the close. I would love for the market to just rally straight up to the low last week, but unfortunately, even if it did, I would have trouble getting in. There's only 20 minutes left in the day, and it's really important to not be too eager to enter. I think one of the biggest mistakes people make is they try and force things. They force trades because they screwed up on, maybe they took a bad trade and they're trying to make up for a loss. A lot of times we will rationally take trades just because we're making up for something, and that's not what institutions do. That's not what computers do. So one way to measure that is to ask yourself, if I was flat or if I had a profit for the day, would I take this trade? So what I mean by that is, and 74, it's a buy, but I don't want to buy at the top of the range. Some traders will, but I will miss it regardless of whatever it does. That doesn't mean it's not a bad buy. It's just I don't want to really take a trade this late in the day. But that's just my preference. But back to what I was saying, one way to measure if it's a bad trade is it's important to recognize if you would take that trade if your account had a profit that day. So in other words, a lot of times we will trade differently when we're negative for the day than we would if we were positive. And that is really important to start to recognize. Because those are those dumb trades we take. We'll often, revenge trading. Everybody's done it. So 74, bull bar closing on its high. An okay swing buy, betting on a buy the close rally into the close. And it's still possible we get to the low last week. We tried to break above the high of the day on 68. We're trying again on 71. Now we're trying again on 75. The bulls have a chance. But I don't know. I'm not too eager. I think it's hard to justify the math, because if you buy above 74, where's your stop? If you put it below 74, then this is your risk. What's the probability? Let's do it like this. I can't do that. What's the probability the market's going to go here before it goes here? Well, I don't know. I think it's not, even if it's 50-50, that's not high enough for 1 times your risk. So there might be more traders selling up here. Also, bears sold the high of 73, scaled and higher. They're trying to get out of the 73 high. So not an ideal buy above. So the bulls that bought above 74, how are they feeling? A lot of traders looks like they bought 74 and scalped out for a few points. And what do traders do if you're long? What do you do on 75 if it's close on the flow? Well, challenging. You can call it a double top with 68, but it's a bear bar. It could be a bear bar closing on the flow at the bottom of the range. But at the size of 74 is strong enough that you may get a second leg up. So not really a great sell below 75 if it's a bear bar either. Trying to get a close above the 14, which would improve the odds of getting the low last week. Again, this is the fight over the weekly chart. The bulls are trying so desperately hard to get to the low of 903.5, which is right here. And they might do it. But, again, I would just let this go. Probably not going to be a buy the close rally. And, because of that, again, not ideal. Consecutive bull bars, probably going a little bit higher. But what do you have to risk for what you stand to make? That is the question. So if you're buying 75 and your stop's below 74, what's your risk? It's right here. So that's 1 times your risk. Takes you all the way up to 70 to the low last week. And there's a reason for that. But, I don't know. I think more traders are interested in buying a pullback, but there's only 30 minutes left in the day, so you really only have like 6 bars left. Bears selling, scaled and higher, making money back at the 72 high, so probably buying down here, or buyers down here. Bears taking profits, bulls buying for a scalp, but really dangerous late in the day. We have targets above, targets below, open of the day, low of last week, high. So again, traders are battling hard over what to do with the daily chart and the weekly chart. Al talks about this, and I think it's pretty interesting. So, and I don't know a ton about options, at least as far as, I know the basics. And one thing he would talk about, though, and it makes sense, is, right now, think about what the market's doing. It's trying to form a double bottom, and second leg down, failed breakout below the September 1st, July 28th low. So maybe this is a reasonable buy down here. It's a micro channel, so it's not ideal. But the point with that is the market might be forcing traders, if you want to buy a call, so maybe traders want to buy calls down here, betting the market will gap up. I said on the 60-minute chart that we probably got to get to the moving average. So let's say you want to buy a call. And one thing Al said that what happens is Friday, you often get a reasonable setup going into the weekend. But if you want to buy a call option, it forces you to have time decay over the weekend. So instead of entering on, if you wait till Monday, you risk the odds of a gap up and price being at your target. But if you enter over the weekend, you lose time decay. So you already lose value because you have Saturday and Sunday of obviously the market not going anywhere. Not really a great example here, but I think that's pretty interesting. Happens enough. So back to the 5 minute. Again, this is why I didn't want to buy above 74. It's just too much risk. And looks like we may be going back to the open of the day instead of the highs. But again, you do not win the trading game on one trade. You win the trading game by a bunch of reasonable trades consistently. So there's not much time left in the day. It's basically bar 76. Don't do something that's just going to ruin the day or really hurt yourself. There's always, the great thing about trading is there's always Monday. There's always a new week. And there's nothing wrong with waiting till, wait through the weekend and wait till Monday. You can hit the mental reset button. Okay, I'm back. So the bulls are still trying to get the low last week. And they still might. They've got 10 minutes left, but I think more importantly, they're trying to get the week to close on its high. So as you can see on the daily chart, let me talk about the weekly chart. Weekly chart, bulls trying really hard to close above the low last week, but again, they're probably going to run out of time here. Daily chart, this is what I was talking about with options. So second leg down, failed breakout below the September 1st low. However, if you're looking to buy calls and you buy here, you have the problem of, and it's probably too late in the day, but if you were, you had the issue with time and time decay. So who knows, gap down here, micro channel, maybe we gap up on Monday. But, we sold off back into this range, and overall, just a really big trading range. So what do I think is going to happen over the next couple of weeks? Well, I think we're going to get back to 4,000 somewhere in this area. So we gapped down on the day, went sideways to the moving average, sold off to the low of the day, and then rallied and around, the midpoint of the day's range. By the way, I'm opening the question box for the webinar. So I'll answer a few questions. Let me do like this. There we go. So first bar of the day, bar 1, big bear bar, closing on its low. You can take it for a swing short. The only problem is you're selling a big gap down far below the moving average, probably buyers not far below and sideways. So not really an ideal swing short, but you're betting on a trend from the open. I wouldn't take it. Typically, the first bar of the day does not lead to the high or low of the day. 20% chance in general it does. Sorry about that. Bar 2, big bull bar closing on its high. But now you have a big bear bar closing on its low, big bull bar closing on its high. Some bears sold below bar 1, trapped on bar 2, they will use the low of bar 1 to exit. So we might have to pull back even if we go above bar 2 and big bear bar. So bar 3, probably buyers below bar 2. Micro channel, typically when you get a big gap down, the market goes sideways and doesn't go straight up, so not an ideal buy above bar 2. Doji, bulls tried to get a second entry buy, however some bulls bought the close scaled in lower. So they buy the close of bar 2, they buy more below bar 2 during bar 3. That's the midpoint, so some traders trying to get out break even. And starting to get follow through. Broke to the downside, but 3 pushes, 2, 4, and 6. Failed to break to close on the low. Probably going to have an opening reversal, so probably buyers somewhere down here. Micro channel, so first up may fail, and boom. So open the day, bulls bought, and they scalped out back at the open and back at the close of bar 2. Some traders bought the close of bar 2, and when bar 3 went below bar 2, they used a really wide stop and they just bought all the way down. So where are we? 8. Well, let me back up. 8 closed below the midpoint, so a warning that the market might be more of a leg in a trading range. But, disappointing for the bulls. However, it's a bad sell signal below bar 8, so more traders may buy it. Strong bull bar on bar 9, 3 consecutive bull bars. It's a micro channel. So probably buyers below and at least second leg up. Traders will buy this close for the fact they know there will be a second leg. However, really not ideal. It's probably better if you can look to buy a pullback, which is what happened here. Traders bought. They bought into this gap here. The bulls, they see a double top, second entry short, low 1, pullback, low 2. You can call it a double top, and they want to measure move down, but with this much buying pressure and how climactic we are on the 60-minute chart, you can see the moving average is just all the way up here, probably going more sideways. Breakout pullback buy on bar 11. Some bulls bought the close scaled and lower, getting out break even here. And now we have a second entry short, bar 12. So some traders will get out here, but with this much buying pressure, this second entry short could easily turn into a high 2 buy, which it did here. That signal bar, probably going above these highs right here, which it did. And now the market formed a wedge, 1, 2, 3. So probably we'll get back to the open of the day, gap down and wedge top. As Al often says in trading the open videos, and as I said on the pre-market, traders will look to buy you can look for, if you're looking for a swing, look for wedge top, wedge bottom, double top. So we have a wedge top, so might be an okay swing. Better 3-4 bar micro channel, better to wait for a bear bar closing on its low, which they have here. So it's a credible swing short, stop above, betting on a couple legs down, which we got. So leg 1, pull back on a smaller time frame. Leg 2, testing the high of bar 6 and 7, so maybe buyers down here. However, micro channel down to 19, probably sellers above, scaling in higher. Low 1 short on 28, so might be more buyers down here, but tight enough channel. First reversal may fail, but 50% pullback in the buy zone, not really an ideal place to probably sell. And big bull bar, but closing at the moving average. The bulls need to get above the moving average. And if they fail, the market may just form a second entry short with bar 20, 20 being the low 1, 20, can't tell what that was, 23 being the low 2. So it's a credible short below 22 or 23, but again, really challenging to sell after a big bull bar. So if you're doing it, you're betting on the bear breakout. With this much buying pressure in the day, I think there's more buyers somewhere down here. So to me, I'm not that thrilled about selling that big of a bar. Entry bar closed below the stop entry, but not below these. So the market may fail here. Now the bulls have a wedge with 11, 18, or 19, and then 25. But tight channel down, forcing traders to buy just under the moving average, not ideal. Some bulls will buy, but if they don't get the breakout, they may be quick to exit, and you can see it went outside down, and this might have been strong enough for a second leg. So what do traders do here? Well, some traders will buy more. To break below a wedge, in general, 50-50 chance the breakout is successful, 50-50 chance it fails. But bottom of a trading range, probably more buyers down here than sellers. Bull bar, so breakout, pullback short. The bears trying to defend this gap here. Probably buyers somewhere in this area and may get back to the 25 low, 25 high. It's possible bulls bought 25 and more below 25, getting out break even on the entire trade here. Right there at the 27-28 high. Inside bar on 28 right here. Not a great buy, but traders will take it, and you can see bulls made money. Bulls bought more lower, getting out break even. Trying to break above the moving average, but again, until we have a breakout, we don't have a breakout. 30 close above the moving average, good for the bulls, but testing the highs up here, so it might be more sellers up here than buyers. And 31, it's a double top with 22 or 23. So bears will sell here, stop above here or here, betting on the measure move down. 32, close on low. Bulls bought this close, scaled in lower on, let me see if I can make that look a little better. That really is annoying. Just 1 second here. Let me do it like this. I'm trying to get to where we can see the bars better, or the numbers. There we go. That might work better. 1 second here. There we go. Kept cutting off the final end of the number, and it's really distracting. So where were we? There we go. 31, double top. Bears will bet on the measure move down, so it's a reasonable sell. 32, a good bear bar closing on its low. Some bulls bought the 30 low, more lower, trying to get out break even, and it could not get back to the 30 close. 32, entry bar. 33, follow through. Probably best to get out of shorts, get out of longs, betting on a second leg down. And micro channel, first up should fail, but possible second leg trap. We have a wedge bottom. They'll break out below this wedge here. So probably sellers above. 36, 7 bar bear micro channel, testing the low, bar 6. I would not personally be short down here. I think there's too much risk that we're going to close this gap over here and we're going to find buyers down here. 37, again, probably sellers above. 38, low and short, but bottom of a trading range, might be more buyers. Didn't even trigger. We closed the gap. 40, follow through after the 39 breakout. Testing up here, which is probably going to be resistance, but may break out to the upside. However, may just go sideways. Big down, big up, probably sideways. For the bears, it's 2 legs up, but really it's a micro channel, so probably buyers below, but may have to test the 38 high. Now we have a second entry short. Some bulls will exit below, but we'll get down to the 38 high, and then we have to form a lower high. And really sideways in here. Bulls try to break above, but when you get this big of a bull bar, there might be more buyers below, because if you're selling it, you have big risk on a low probability trade. And usually it's better to do the opposite. Bull bar, but could not break above 49, so probably buyers below, but might just be a second leg trap. And bear bar, what do? Some bulls will get out since it's 20 gap bar short. We first close completely above the moving average, first low completely above the moving average in many bars. 3 consecutive bear bars, 52, 53, trying to break to a new low, but we have so much buying pressure here, here, bull bar here, that I think the odds are the bulls are going to get an upside breakout. This does not look like a strong trend from the open. Consecutive bull bars, and then doji, still going sideways, trying to break below, and now we have a second entry buy, high 1, high 2, and you call it a higher low. Give up bar to the open of the day, closing above the past several bars. Bears sold this high here and here at the 58 high, so they're trapped. So bears will sell up here, trying probably to exit at break even, which is what happened here. Other bulls bought a 50% pullback of this bar here. 61 closed on high, but closed under the 60 high. So lowers the probability for the bulls, but still consecutive bull bars, probably going at least a little bit higher. And 62, a bear bar, so more sellers above the 61 high and 60 high than buyers, but micro channel, probably buyers down here and buyers into this gap. Bulls buying 50% from this high to down here. And we have a breakout. Now this overlap here, the overlap here increases the chances there's going to be overlap here. There's still, big bull bar, bad follow through. Big bull bar, probably going to get bad follow through here. And the bears, 66, you can call it a low 2 short, low 1, low 2, but strong enough breakout may have to get a second and third leg. It is a little parabolic or climactic. Bull breakout sideways, so it's hard for bulls to want to stay long here. And this bar actually broke to the upside, turned down, and then broke to the upside again. So you will have bulls that were probably shaken out of this rally, and they're trapped out. You'll also have bears trapped in. But, I don't know. Do bulls buy 67? They can. Some will for a scalp, but the problem is it's a breakout above a channel, third push up, maybe the fourth, at the high of the day, so not ideal. And when traders saw this, everybody started bailing out of positions here, and the market started testing back to this low, these closes, and probably down here. Open of the day is a magnet, strong enough breakout, probably a second leg down. Bulls bought 68 and more lower. They might be so disappointed here, they may try and get out break even. If that's the case, break even is around the highs of bar 70 and the midpoint of this bar here, which means the midpoint is going to be resistance. So you'll have bears selling up here and bulls selling out of longs. Tried to break out to the upside. Bulls that bought scaled in lower, getting out break even here, failed break out of the high of the day for the second time. And bears sold. Bears sold the 70 high and more higher. It's a bad high 1 because 70 is a bear bar. And it's also a bad short below bar 71. So probably more buyers below, but might get to the open of the day first, which it did. Bulls bought. They bought more lower on 72 and 73, getting out during 73. 73 tried to be a second entry buy. However, the bar got too big and traders sold it into the close. So probably sellers above. Surprise breakout, probably at least a small second leg. However, 74, the bar's big. It's a bad signal bar. There's probably going to be more sellers above it than buyers. But I wouldn't sell the high of 73 with it being this late in the day. 75, a weak entry bar couldn't even close above the high of the day. So again, might be more sellers up here and not really a great area to buy. Big bear bar, bears sold the 73 high scaling in, made money. Bulls buying the 50% pullback from the 71 low up to here. They made money, probably going more sideways here. And, you call it a breakout pullback buy, but bear bar, really better to do nothing here. And you can see the bulls ended up closing basically on the high, which is really impressive. Close of the bar is 94, and it's, 6 ticks is the tail, so basically nothing. So really impressive day for the bulls. For stop entries, that is not a simple one. You can take the sell below 1. I would not. Some bulls will buy above bar 2, but it didn't trigger. Still not a great buy. Probably better to wait for a wedge top or a wedge bottom or double top, double bottom. Here, not really an ideal buy because of all the tails. Some traders will buy the high one, but close to the moving average, so might go more sideways. And the first stop entry may be selling below 15, and some traders will sell 23, but not ideal. And, you know, if you're buying 25, it's fairly challenging to manage after these two bear bars. And, you know, maybe buying 26 or 27, 28, but micro channel here. If you're buying here, you're betting on the market getting to the moving average or the test of 25. And then probably the next sell is below 32, and really hard to buy any of this. And, you know, maybe you sell below 63 and then below 51, but hard to do with the micro channel. And, you know, close above the moving average, so maybe you buy 59, and you can buy the 61 high, but you need a wide stop. And it's really kind of it. It's pretty tough for it. For limit orders, traders are buying below bars here. Probably buy below 10, challenging to do, but traders will do it. Hard because it's closing on its low, and it's pretty aggressive. Some traders will sell 18, but it's 2 legs down, so 50% pullback, not ideal. Traders might, you know, maybe below 25, but it's a wedge, so increased risk this fails. And bulls that bought the 30 low, when they see 31 and the market goes up, they got to be quick to get out here. Do you sell above 36? I would not. With this many bars down late in the range or low in the range, you know, the pullback could be deeper than you think. And some bulls will buy the 41 low, which they did here. Some bears sell 44 high, but not ideal. And you can buy the low of 56, 57 during 58. And then probably buy the 62 low, but kind of aggressive. And then the rest of this is really just limit orders. Buy the close, sell the close. You know, again, and you know, in here it's trading range, so traders are buying the close, scaling in lower. So hard to buy the close here at the moving average. Hard to sell the close, you know, in here. And this is all trading range price action. So traders are selling, scaling in, getting out on the second leg. Maybe selling the 32 close, 33 close, but you know, you have to be pretty quick to make decisions in here. And, you know, an obvious buy the close, probably 60, 61, and then 64, 65, and then really just more kind of a mess in there. Always in. First credible always in trade. You know, it's kind of tough. Maybe you wait for the pullback on bar 11. But if you do, you get out below 15, bears sell, but then they have to probably get out. You know, I get out, I don't know, maybe above this bar. I wouldn't want to hold short during a 50% pullback. Bears, it's aggressive, they can sell here, but they probably get out there or here. Bulls buy, and then bears sell below here. And they probably get out somewhere above these bars, get short here, but then they have to get out here, and then they can sell, and then they can buy 58. And where did the bears sell? And then the bulls probably have to get out a couple points below here, maybe 5 points below this bar. And nothing really else to do for always in. Let me look at questions. So, okay, question, how do you avoid panicking out after entering on days like this when bars are changing back and forth from red to green multiple times as it's forming? Yeah, you know, that is classic trading range price action. And the one thing you do from the beginning to not panic is you trade small. And that is why I'm such a really big proponent of the SPY or something like a stock, because you can trade in terms of shares. So, you know, if you can get over the pattern day trading rule, which for US people it's 25,000, which means you have to have, you know, 25,000, and that's the minimum to trade. But what I would do is I would start trading 2 or 3 or 4 shares. And what that would allow me to do is I could scale out. So maybe I think the market's going to bottom here. I could buy 2 shares, use a really wide stop, and not panic. And when you do that, you start to kind of figure things out, and then you can start to kind of, before you know it, maybe you're trading 10 shares or 20 shares, and then before you know it, you're trading 50 shares, and that would be, the 50 shares would be the equivalent of 1 micro. The problem with the micros I have is you cannot really use wide. It's very challenging for people starting out to use wide stops and scale in because the risk gets too big. You know, if you're, I mean, it's simple. If you're, 10 points is $50. If you scale in twice, you're risking near $100. But I would focus more on, for most people. So the first part to your question, how do you avoid panicking out, is trading small when the bars are going back and forth. The second portion to your question is you start to just get a feel and an expectation of disappointment. I expect every day to disappoint me. I like trading range days. I like trading range days because they reverse all the time and one can expect disappointment. And the reason I like that is if most bars are going to be disappointing and be limit order bars, then there's an expectation. You can kind of, if I know the first 6 bars of the day are going to go sideways, then if they go sideways, it met my expectation. So the first thing I would realize is most of the time traders don't get trapped. So in other words, most of the time traders buying more lower make money. They're selling above bars here, scaling in, they get out break even. They sell this close, they make money. They sell more higher, they make money. They buy more lower, they make money. That's the first thing I would realize is most of the time traders can avoid a loss. And that doesn't mean you should scale in on every trade. That just means you should understand that most of the time the market's going to go sideways. And for me, I was talking all through here. I wanted the market to go up to here. I didn't think it would get there. I honestly didn't even think it would get up to here. I thought we were just going to go to the open of the day. So when I see this bar on 60 and I see the tail, my thought is this is disappointing. So I'm always trying to look for things that are disappointing that would upset me as a swing trader because that is important to recognize. So I hope that answers your question. Yeah, I'm sure. I'm not sure about CFDs in the U.S. I don't know if you can trade them. But yeah, I think Tom Hugard, sorry if I mispronounced his name, I think he's in Europe, so I'd be very interested to hear his take on how one can trade small that aren't in the U.S. So let me check last time for questions. But overall, trading range day, you just have to expect disappointment. So we will see what next week brings us. Maybe we gap up on Monday. But ultimately, I think we're going to get back to 4,000 and at least bounce a little bit. All right. Hope everyone has a good weekend.